All right. A respected analyst reports that last week's T-bill rate at 1% is lower than the rate for the preceding week and lower than the average of the past month. Which of the following is true? I kind of like this question. I think it's kind of the takeaway is very testable. I'm not sure you'll see it in this phraseology.
So since the rate is lower, the price of the T-bills are higher.
Who would love it? That's exactly what this is testing you on. You nailed it. Inverse relationship of interest rates and prices. Excellent. Excellent. A CMO makes an interest only payment to investor. This payment will,
Uh, um, I'm not too familiar on CMOs, but I think, let me see. I think it's A.
yeah, there is. It says the reason you missed it, it's not a bad miss. The reason you missed it is because it said interest only. So you're right about the mortgage payments that are being passed through the interest and principal. You're not going to be taxed on the principal, but this question specifically said interest only.
I
So
see.
that's the only reason you missed it. So it was actually B because it was interest only. Now, I wouldn't
Okay.
worry about this as your tutor, Andrea. I'm not worried at all about this particular question on CMOs. The test question on CMOs is to know that PACS, plan amortization classes, have more predictability and therefore lower risk than tax
Mm-hmm.
targeted amortization classes, and to know that a buyer has to sign a suitability statement saying they understand that they're buying a derivative security, not a proportion ownership in a Ginnie Mae pool, but rather a cash flow from a Ginnie Mae pool. So, if you tell you missed your mark on seven because of CMOs, I'm going to say, you had other problems elsewhere. Minority stockholders are more likely to be able to elect directors, which form of voting?
Um, Cumulative?
Right on. Cumulative allows you to put
Mm-hmm.
all your votes on one person.
Yeah.
So excellent. An investor purchases a zero coupon bond at a price of 64. The bond matures in 9 years. 5 years later, the investor sells the bond at a price of 80. The result would be
Can I write this down just
absolutely. I had a guy yesterday I was working with, and I actually, it's a buffet. Take what you like, leave what you don't. But I like to draw a little picture. Here's what I like to do is just make my little picture here. And what does this look like? This is called straight line amortization upward, called accretion. And then what I like to do is make up my little picture and say, okay, page 640. I'm going to get back at maturity 1,000. And so, I like to say, okay, so that's
Mhm.
$360.
So from what I got a loss of 40.
Man, well, you beat the tutor. I hadn't even done the math yet. I was getting ready to do the math. So you say it's a long-term capital loss of $40, and you are correct. Good job, man. That was quick. By the way, though, give yourself permission. You got plenty of time on the test. I don't think you're going to run out of time. You might run out of right answers, but not time. So, make sure if you need to take the time, that you take the time to do the math, take your notes, whatever you want to do, so that
Yeah, I think that's what got to me the first time because it feels like such a long exam.
you know, well, it is. And we should give ourselves permission if we're 90 minutes in or halfway through, we'll take a little 15-minute break. Just I wonder how many people, when they miss their mark, they just run out of brain power because they're tired.
Yeah, no, I think that happened to me. I felt like at some point I was just like answering just to like finish
People
kind
do.
of.
I think it's like, mouse in a maze, and somehow you think you get some cheese at the end, and, C, D, E, D, so you got to just discipline yourself. Okay, let me finish strong here. An agent taking which of the following actions would be committing a violation?
Mm, A.
Yeah, I mean, come on, you're going to check the kid gave you permission to do it? Which of the following is a required disclosure on your U4?
This is in, oh, let me make sure I read it correctly.
Yeah,
Uh,
take your time.
Employment history for the previous 10 years.
There you go, right? Well, no, it says which of the following is a required disclosure. You are correct, right? It's 10, not three, so they tried to mess you up with.
Hmm.
I got another question for you. If you have a no answer on your U4 that becomes a yes answer, how many days do you have to amend that U4 to reflect the yes answer?
30 days.
Excellent, excellent. There are some yes answers that are more severe than others, right? And so statutory disqualification would be conviction of a felony within the last 10 years, a misdemeanor involving embezzlement of money and securities, or you've been denied, suspended, or revoked registration in the past. Those are three yes answers that most firms would say, Andy, thanks, but we're not going to be employing you.
Right. These kind of questions actually, I remember the first time I took it, messed me up big time because I feel like when you're studying in your head, you're like, oh, these are easy. I'll remember I'll
Oh
remember it.
yeah, oh yeah, be
And then in
careful.
the moment of the exam, you're like, oh my gosh,
Oh,
I can't remember what.
absolutely. Absolutely. A married couple, both hoping to retire within the next 5 to 7 years, has expressed having a low risk tolerance regarding the stock market. They have a combined income of $350,000. Given this information, which of the following portfolio mixes would be most suitable?
I'm gonna say A.
You are correct. You are correct. Good job. These are called judgment questions. I think these are some of the tougher questions, right? Because it's not like, the three styles of questions you get are recognition, practical application. Well, you were great on that practical application. You came up with the number quicker than I did, right? So we don't want to give up recognition and practical application because there's no interpretation of the right answer,
Right.
right? The ones that I struggle with sometimes are like these, but even I miss them because I think they should have more stock than that. And I bring my own prejudicial behavior into the question and then I, miss it. Working capital is.
Oh, sorry, I think the last one was marked as C.
Oh, did I mark the wrong thing? Oh, what'd you say? Did you say treasury notes, muni bonds, and Ginnie Mae's or no? I thought you did.
Oh, no, so I guess I was wrong.
Oh,
I,
what'd you
s-
say?
I said A.
Oh, you were wrong. And we're trying to
Okay.
get a real score. So, yeah. Let's just go through this again. It says the reason you are wrong there is you have preferred stock,
Mm,
right? And they just told you they don't like the risk of the stock market, and a preferred stock is a fixed income investment vehicle for sure. They have combined income of 350,000. So that means they're going to be in a pretty high tax bracket.
mm,
So,
okay.
by the way, I prefer they would tell us that they have a tax problem or something here, right?
Right.
That's not bad. I think that's your first miss. That'll work. Working capital is
This is current assets minus current liabilities.
perfect. Perfect. Just because you're doing so well, I don't do this if somebody's not doing well because then it just becomes more damaging to their confidence and their psyche. But do you know what A is called?
Current. That is the I think that's the
You got it.
I
You
feel like
got
I
it.
have it.
I can
Is
tell
that
you're about to say it.
the quick asset?
Perfect. Excellent. Excellent. Trust yourself on that, by the way, because I could tell you see you forming the phonetics of you know. Good job. Excellent. When a bond is selling at a premium, this is a teeter-totter seesaw question.
The current yield will be higher than the yield to maturity.
Excellent. 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 Information found on the bond buyer would include all the following except
I'm actually not sure on this one, so I'm gonna have to guess.
Well, guessing is okay.
Um, I'm just gonna go with C. I'm not too sure on
The
this.
RevDex is in there, so you missed it, but that's okay. I haven't had anybody tell me they've seen this particular question in a long, long time. The play or any of these indicators over a long, long time. But the placement ratio is bonds sold by bonds offered, right? So that tells
Hmm.
us the health of the market, right? If we placement ratio is 70%, that means we sold 70% of the bonds, 30% went into inventory. If next time we look at it, it's 90%, that means the market's getting stronger. Or if its next one is 60 weaker. Haven't had anybody tell me they've seen this in a long time. The visible supply is brand new bonds coming to market over the next 30 days. RevDex is the revenue bonds. And then the bond buyer is not about the secondary market as much as it's about the primary market. What is testable on this question still is to know if I ask you on the test, a newspaper widely read in the municipal market is known as the bond buyer. The second test question is to know something that's not here, but is certainly found in the bond buyer, is what's called a notice of sale.
Hmm.
And that's where the municipality says, attention, investment bankers, we're looking for some help selling a bond. And so the notice of sale would mean that we can structure a syndicate and submit a bid. And that would mean it's a competitive underwriting for muni bonds. So I'm not worried about this particular question. I'm not worried that you guessed on it. Who cares? But I do want you to know that's a newspaper widely read in the municipal market. Now it's electronic. And then I would want you to know that that's where you'd find the notice of sale. And the notice of sale means it's a competitive bond underwriting, which means there are going to be various syndicates being formed. A
Okay.
registered rep of a FINRA member broker dealer. So every time I get a registered rep, I go, oh, that's me. Right. So I just put myself
Hmm.
in the question. Andy is a representative of a FINRA member firm. Andy is gathering information from a prospective customer. When Andy uses this information to prepare a financial profile, which of the following would not be included? Now, I don't like this particular question. However, it's very testable to know what are called non-financial considerations,
Hmm.
things that we might or might not have on a financial profile. It doesn't mean it's important. It just means it's not a number.
So the individual's risk tolerance.
Yeah, very important, but it doesn't
Hmm.
show up on the balance sheet or income statement of the customer.
Questions like this can be tricky because sometimes, like when you're just reading the question fast, like when I first was reading it before you mentioned certain things that kind of started to stand out to me, in my head, I would have thought, like, I don't know why I read, like, I was assuming the question was asking which of these is like not as important to create, like,
Oh, no, no.
profile. So I
Yeah.
was thinking in my head, I was thinking like, oh, like I don't really think like a credit card balance is really like be as important as the
No,
others. But
no,
then
no. Yeah,
yeah,
this is about,
once you
yeah,
started
so
like pointing those things out, I was like, oh, I
yeah.
need to be more
So this is,
careful reading
yeah,
the
for
question.
sure, for sure. So financial profile, the keyword there is financial. And so what that's about is financial or non-financial considerations. Remember,
Hmm.
non-financial considerations are very important. They just don't show up on a balance sheet.
Hmm.
I say, Andy, what I'd like to do is take a picture of where we're at as of today by creating a balance sheet. Could you tell me about your current assets, cash, or things you plan to turn to cash within the next 12 months?
Hmm.
Can you tell me about your long-term assets, your retirement plans, your house, whatever, your car? Can you tell me about your current liabilities, things we need to pay within the next 12 months? Can you tell me about your long-term liabilities, car loan, mortgage on the house? Your assets, Andy, minus your liabilities equals your net worth. And I'd like to establish that today before we start our financial journey together. You say, Dean, do you know we need to know about my risk tolerance? I go, I do, but Andy, it doesn't belong on your balance sheet.
Okay, makes sense.
That would be your psychological profile. I'd also, Andy, like to look at your income you've got coming in,
Hmm.
your top line and income statement, and what you got going out to see if perhaps we can find some opportunities to redeploy some capital. I say,
Okay.
Andy, do you really need a $8 latte every morning? You go, Dean, are you being judgmental with me? And I go, well, no, but 5 times 8 is 40, times 4 is $160, and maybe we could use that to dollar cost average, and I'll buy you a espresso machine for your house. Right? And I'm joking.
Right.
You get the general idea, right? The
Yeah.
other things would be, like, your risk tolerance. Are you married? Do you need to finance a college education? Those are all non-financials. A customer has 12,000 of capital gains and $15,000 of capital losses and has 50,000 adjusted gross income. How much unused loss is carried forward to the following tax year?
I'm mm, 0.
You are correct. Trust yourself. I don't like that you had that little questioning voice.
I know. I always do that every time I'm taking,
Yeah,
even
well,
when I'm
don't do
taking
that.
it by, even when I'm by myself taking
Well,
it like in my
listen.
kitchen. I'm like, before I press the button, I'm like,
No, no. So listen, I was going to be surprised as your tutor if you missed that, because you've been pretty damn good so far on practical application. So here I net the two numbers. That's three.
3,000. And then
Yeah, and then
you
what you're going to
move.
be able to do is you're going to be able to report on your tax return instead that you made 50,000. We're going to tell the IRS you made 47. By the way,
Mhm,
that's never going to be less than 47. Even if you had 5,000 losses, that's still 47. And then you'd carry forward the rest, right? So I say, hey,
mhm,
sorry, Andy, you used it all up. So
mhm.
new year, next year is a new year's now. Excellent, excellent, excellent. On the test, I think that's mainly going to be recognition, just the 3 grand, not practical application like it was here, where I make you actually, do the arithmetic. A customer buys a CDE October 60 call at 4 and sells a CDE December 60 call at 6. As created,
Mm, these always like trick me in the eye, so I always have to like really like look at it.
yeah,
Um,
so, we can certainly talk about it. But, test question number one about all option strategies is identify the strategy. Because if you can't identify the strategy, you don't know what to do next. That is what
so
this is asking you to identify. This as either a long straddle, a price
so
spread, a calendar spread, or a combination.
I'm like torn between two answers because I don't.
Okay, well, you can just pick one. That's okay. Trust your judgment. I'd go with your flash response is usually your best response.
My gosh, because there's like one thing about one of the answers that I remember, but something is like not adding up completely
Okay.
to what I
All right.
thought it was.
All right. Well, let's
So
pick an answer.
I'm just gonna go with combination.
A combination is a straddle with different strike prices.
I was
So it
looking
would
at the
be,
different expiration dates.
yeah, well, you were on the right track. That's exactly what you should have been looking at. The different expiration dates is called a calendar or a time spread. You should have been able to identify
Um,
the spread. We have a memory aid soda, same option, different action. Same option, different action. So call, or put, different action, buy, sell. That is a spread. The prices are the same. You were on the right track. You were in the hunt. And what was different was the months. And so it's a calendar spread,
okay.
the calendar spread. P.S. Even if we didn't get the premiums here, we did. But we should have known that the longer term option is going to have the greater premium, right? So now we've identified it as spread. We can determine that this is a credit spread
hmm
because we have more money in than money out, right? So the mantra is lower, higher, longer. Longer term option contracts always have greater premiums. Here we gave you the premium, but even though I didn't, the December would have a greater premium. Lower strike calls always have greater premiums, higher strike puts. Not bad. As your tutor, I am not worried at all. Not worried at all. We're 13 questions in. I haven't once to you yet said, Andy, bad miss. Right here, I said you were in the hunt.
Yes.
Yeah, 50-50. Now you told me we were thinking one of the two. Was the C the other one you were thinking of?
So, yeah, it was between C and D.
Okay, good, good. So that's good, good. An investor purchasing long-term AAA rated bonds should be most concerned with
Inflation risk?
excellent. I wish you'd just give her that little questioning voice you use. If your own voice in your head, be confident in that voice, be confident in yourself. You were correct. I think of Microsoft here. Microsoft is a AAA credit rating. And so if you have Microsoft, I say, hey, Andy, I'm going to put some Microsoft debentures into your portfolio. They are AAA. You say, well, Dean, there's no risk. I go, no, 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 no. And then, let's be clear, I never said that,
Hmm.
right? There's
Right.
AAA companies that are no longer with us, right? So marketability risk? No, because, if it's Microsoft, that's as bonds go. I mean, that's pretty easy to buy and sell a Microsoft bond.
Hmm.
Reinvestment risk? No, you nailed it. Inflation risk. The two risks in bonds are credit risk and interest rate risk, right? Those are the two ones. A customer's margin account shows a long market value of 6 and a debit balance of 5. The maintenance margin call will be for,
I suck at margin. Oh my
well, good
gosh.
news. It won't impact your ability to pass the test. Here's the good news. It's not going to impact
For
your.
some reason, I've done like a quiz, like try to focus on like the margin like quizzes on Kaplan because I keep like doing bad on them. For some reason, I can't
Yeah.
like remember like
Well, be
um
careful. Like I say, it's not a target rich environment. We're on question 15. We'll see if this holds out. But on the actual exam, maybe three, four margin questions. This is our first we've encountered. And I think it's going to be way straightforward. It's not going to be as complicated as the margin questions are. Is Kaplan your provider, Andy?
yes, I stuck
Okay.
with Kaplan. Yeah.
Okay. Oh, cool. Because I was going to say I had a young lady and she was using Past Perfect. And listen, it's your money. I mean, she bought a tutoring session.
Uh-huh.
You want to spend the hour just doing margin questions? I'm like, hey, it's your dime. We'll do whatever you want. I just feel bad
Hmm.
that we're going to be doing all kinds of things that are not going to be reflected on your actual exam. Come to find out, her firm wouldn't let her move on to like Unit 20 at Past Perfect until she passed Unit 19 was a margin. Now, she gave me permission to share that as a replay on the channel. I call it hellacious margin questions from hell. I mean, what we should know is the maintenance on a long account is. How much do you need as a minimum maintenance on a long account?
25%.
There you go. So now you're in business, right? Because if you know that's 25%,
I think I just got confused because I know I get confused with questions where they ask like the margin call,
well, you
and then
can
like
make,
how much needs to be deposited, and I always
uh,
confuse it in my head.
when is your test date?
It's on the 27th. It's like in a week and a half, almost
Okay,
2 weeks.
so the deal, I make this deal to everybody, and so I'll make the deal with you right now. If you would like, after we're done, and there's a recording, if you give me permission to share it after you pass your exam, I'm more than happy to comp you an hour, and we can go over margin or whatever else you'd like to do, right?
Okay.
And I'll let you run over. So
It
you
sounds
can
good.
make that decision at the end. Okay, so you should know the classical margin equation, which is long market value minus debit
Hmm.
equals equity.
Yeah.
Right?
Okay.
So, we'll slow down a little bit on this one. So I call this the initial setup. Now, assuming I think as your tutor, I'm not worried about you. And, that's a hint that, hey, you can spend time doing whatever you'd like in the remaining week and a half you have. I say there's better things to be doing.
Hmm.
But assuming you say, damn it, Dean, I want to get all these margin questions right. I said, okay, well, you got to know the classical margin equation to do what we call the setup. I call this the setup. You
Hmm.
correctly identified, and that's mainly recognition. And you correctly told me that that's 25% correctly.
Hmm.
I'm
Yes.
more concerned as your tutor that you actually knew that percentage rather than you can actually do what I'm doing right here, which is I'm marking this account to market. It's called mark to market. And so I say to the customer, I say, listen, to maintain your account, the minimum maintenance is $1,500.
1,500, right? Uh-huh.
Of the 1,500 minimum maintenance, you have 1,000.
Hmm.
So what do I want from you?
The $500.
Yeah, be careful too, because I want this promptly. So I say, Andy, by the way, if you send me that $500, as a convention,
Hmm.
all of the money that comes into a margin account is going to be used to pay down the loan.
Okay,
So
sounds
if
good.
you send me that $500, boom, that's going to go to 4,500. That's going to go to 1,500, and I'll call you again tomorrow. So I
So
say, I
when,
need $500 from you. And you say, Dean, yeah, T plus one plus two. I'll get it to you by T plus three. I go, what are you talking about, Andy? He said, well, I thought I got 2 days under Reg T. I go, no, 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 no. This is not a call for initial money. This is a maintenance call. Those are different.
yeah, that's what I always get
Maintenance
so
calls
confused
are
in
done
the different.
promptly. Promptly.
Okay.
Promptly. So good job. What is minimum? Only because you're doing so well. I'm poking around your brand housing group. You correctly gave me the percentage of a long account being 25%. The house requirement can be more stringent. What is the minimum maintenance for a short account?
30%.
Excellent.
Hmm.
Excellent. I get ones like these. I just go, oh my God.
I know.
A large national grocery chain owns several smaller regional supermarkets. The regional chain that operates in Chicago is experiencing some economic hardship, and the chain gets its debt downgraded by Standard and Poor's. The chain is desperate to raise capital to deal with the lack of cash flow. What method would be best for raising capital? So they're asking to play investment banker. As I said, I think these are the hardest questions on the test, which are these judgment questions.
Ooh. Gonna go with D.
The regional chain, I love it. You nailed it. That's a judgment question. You only get 1 point for each question. But if I were in charge, I would give you 2 or 3 points for this judgment question, investment banker, right? This is where you have a rich company parent. Now, good news that this regional chain has a parent company with some
Hmm.
money, right? Not all of us have rich company parents that can help us out, right? So, a FINRA member firm sends a promotional piece to 35 individuals over a 3-day period. 20 of these individuals are current customers of the firm. The other 15 are prospects whose name came from a commercially available mailing list service. Under FINRA rules on communication with the public, this promotional piece is considered
Retail communication.
right on. And then remember what follows from retail communication is that this has to be pre-approved pre-distribution by a principal, right? And why is it
Hmm.
retail communication? You're correct. And again, I'm poking around just because you're doing well. So otherwise
Hmm.
I would leave you alone. But why were you correct in knowing this was retail communication? What is that definition?
It's for over 25,
There you
right?
go. Love it.
Individuals, yeah.
You nailed it. And if it was 25 or less, then it would be,
Correspondence.
and if it's correspondence, then it's pre or post distribution
Hmm.
by a principal.
Wait, so actually, I just have a question before we move on
Sure,
because
sure.
noticed you worded it a certain way, so I just want to make sure just so I don't miss that just in case. So it's correspondence is counting 25 and under.
Yeah, you said it a different way, Andy. I love it. You said it in
Hmm.
plain English. You said over 25.
Okay,
I
so
say more than 25, the same thing, right? So
okay.
what one thing that sometimes, again, I have sometimes I do this. I haven't done this to you yet. Who knows? Maybe I will at some point. But sometimes I like to cover up the answer set and say, okay, what do you think the answer is? And I had a guy I was working with, and I was kind of glad I did it because we started doing it two, three, four times. And what was happening was he was getting the right answer, but the answer he would say wasn't there. And so then I would say, well, your answer is correct. So now you got to go through the answer set and say, okay, what says the same damn thing differently? Right. So, every once in a while I have somebody like on a 66, they'll call me and go, Dean, de minimis is five or less. And this says six or more. I go, whoa, those are the same things.
Yeah.
Right. So you just got to be a little careful. When you're, doing it, you say, God, like even me, I struggle sometimes. I go, God, I know this.
So
Like we did a
over
balance sheet question.
25 is the correct, like,
Yeah, more than
okay.
25 is
Okay.
retail
Okay.
communication. 25 or less is correspondent.
Correspondence.
And I always struggle because I think of the balance sheet question as assets minus liability equals net worth. So whenever I see it expressed as assets equals liability net worth, it takes me a minute to kind of go, yeah, that's the same math. The advantage of an oil and gas direct participation program do not generally include which of the following?
A.
Yeah, that has nothing to do with it. Potential amendment tax is related to industrial development revenue agency bonds. Good job. Your customers in their early 30s received a modest inheritance from a relative, listing tax deferred growth as an objective for retirement income. Which of the following investments is most suitable?
I am horrible with the tax diversion.
Well, that's okay. You're doing
So,
great. You're doing great.
um,
The key thing is tax deferred. That is the hint.
A.
Yeah, good job, right? That variable
Hmm.
annuity
Hmm.
is a mutual fund with an insurance wrapper, and that separate account and the mutual fund
Hmm.
separate account will grow tax deferred. Which sometimes where you refer to is a non-qualified retirement plan as a variable annuity. Non-qualified because you have a cost basis here,
Hmm.
right? So good job. Which of the following orders is reduced on the order book on the ex-dividend date for a cash dividend?
I've seen this question before so
I
many
like
times,
this
and
question.
I always forget the answer.
Well, remember what we don't want is the order to be triggered as a result of the dividend. Because remember, on the dividend
Mhm.
X date, the stock is going to go down by the amount of the dividend. So we're only going to adjust the orders that could be triggered potentially as a result of that dividend. I like this question because this is an example of where the bliss can be helpful, right? That's to remind us where we place orders in relationship to the current market price. So I just told you that on the X date, let's say this, I hear Oracle recently upped their
Mhm.
quarterly dividend to 50 cents, right? And so that Oracle stock is going to go down by 50 cents. Ziggy, what is the stock market price of Oracle?
When the market closed on Friday, Oracle traded at 149 US dollars and 27 cents on the New York Stock Exchange, up 1.1% since previous close.
So if you had given me a buy limit at 148.95, it was going to get triggered as a result of this 50-cent dividend. So is a buy stop above or below the market? A buy stop, whether it becomes a market order or a limit order, is above the market and therefore cannot be triggered as a result of the dividend and therefore does not need to be adjusted. A buy stop order. Nope. But it's a
Mhm.
buy stop that turns into a market order or a buy stop that turns into a limit order, it's above the market. a sell limit. There's no way for an Oracle sell limit to be triggered because it's above the market. The only order here that potentially could be triggered as a result of the X date would be the buy limit, right?
Hmm.
And here Kaplan's being a jerk, instead of calling it a buy limit, they say limit order to buy. Right? I like this question. So this is an illustration of
But
where that
yeah, I
swap's to be.
definitely have to review like the bliss and
Okay, yeah. Mhm.
yeah, because these always could get to me. Like I always get
Now, good
confused with
news.
the
Good news, not target rich, right? So, well, we've got one order question so far. On the test, the test is not going to be heavy on margin. It's not going to be heavy on type of orders. I'm not saying it's not there. I'm just saying it's not heavy.
hmm
It's not going to be heavy on partnerships. All test prep vendors, including Kaplan, I think overweight for whatever reason, margins, partnerships, types of orders. The vast majority of your questions are going to be on critical function three products. And that's going to be munis, mutual funds, and options. Right. So I wouldn't worry too much about that. Um, I'm going to start taking a hash mark. I've helped you because we want to get a good mark. And I think I've helped you out. I'm going to say I've helped you on three questions. So on this question, it's going to be marked right, but when we go over it, we're going to throw it back into the mix of a miss just because we want to make sure that we know. I'm not worried about you at all, Andy.
hmm
So far, I don't want to jinx us, but so far, this is ending up being an insurance policy for you, right? Which I'm always
Yeah.
happy when I'm doing this and I'm thinking, okay, Andy's in a good spot. I get worried when I'm doing this. Oh my God, I did one the other day, and unfortunately, I had to tell this. She was good news. She didn't book this like 2 days before her test.
hmm
But about 20 questions in, where we're at right now, I had to say, "Hey, Andy, I need to make you an offer here. You don't have enough base knowledge yet to be doing a shared screen practice test with me because you don't know what you're being asked and you don't know what the answers being offered to you are.
hmm
What I'd like to do is just call it quits here, hour in, and let's reschedule this when you've had a chance to do some more work, lay some more base. And
hmm
obviously that's not where you're at. So that's a wonderful place to be. Sometimes I like where you're at right now. I wish you were testing tomorrow. I can get it done. A customer sold at a bond and a loss. Must wait how long before she can buy back a substantially identical bond and not have the sale classified as a wash sale?
30 days?
You're really good on recognition, really good. So I wish you'd give yourself credit for that and get rid of that little questioning voice. You have yet to be wrong on a recognition question. A client age 27 is new to investing with 20,000 saved thus far and 400 to allocate toward investing monthly. His goal is to purchase a home in 3 to 5 years. What is the most suitable recommendation?
Mm, I'm a little stuck on this one, but I
Yeah, I think I would go with process of elimination, right? So we definitely aren't going to recommend you open a margin account,
no, yeah, I definitely
right?
crossed that
And we're
one
not
out.
going to leverage ETF that does 2 or 3 times up or down what the market does. That sounds unreasonable. Equity investments are for the longer term time horizon. So the key to this question is his time horizon.
Well, I was gonna say D because I know
You're correct.
money market funds are more like on a like
Yeah,
liquid
yeah.
side.
So yeah, I say, what do you want to do with money you need right away?
hmm
You're absolutely right. This is very much a test question. On the real test, they have this almost exact same question.
I was thinking D because of like the liquidity since it
That's
said like three
exactly
to
right.
five years.
That's exactly right. The one that shows up on the test goes something like this. Your
But
customer has,
I got a little unsure because when it comes to mutual funds, sometimes I get tricked with like some of their like rules and stuff.
well, yeah, there wasn't a rule question. Got it right. The
Hmm.
one they like on the test is your customer has been relocated. They've sold their home in California. They tell you that they're going to rent for 6 to 12 months to find
Hmm.
out what neighborhood they'd like, and then they're going to make an
Hmm.
offer on stock of the or a house in the new location, and you say money market.
Okay,
More
sounds good.
importantly, what isn't a money market fund? What would be found? So I say, Andy, you told me you're going to put my $20,000 and my $400 a month in a money market fund. What the hell is that? You say, very testable, Andy, a money market fund owns money market instruments, securities, high quality debt maturing in less than 12 months, 12 months or less. And then I say, well, and you say, well, Dean, like what? And I say, oh, that was on my Series 7, like commercial paper, bankers'
Mhm.
acceptances, negotiable jumbo CDs, T-bills. You got that correct. And which of the following markets would an investor expect to find closed-end company shares traded?
C.
C, 2 and 4. You are correct. This is testing you on very testable the distinctions of open-end funds versus closed-end funds. And you nailed it. Closed-end funds trade supply and demand in the secondary market. Good job. Which of the following are true of a Roth IRA?
Um, A.
We got you. They're very much a test question. So this is our first bad miss, not bad, 24 questions in. We not only need to be able to contrast the difference between open-end and closed-end funds, we need to be able to contrast a traditional IRA with a Roth IRA. And one of the things that gives the Roth its juice is there are no required minimum
Oh
distributions.
my gosh. So do which of these are
Yeah, yeah.
true?
So now you were right about the one. You got the one correct, but it was 1 and 4. We can live with
Okay.
that. We can live with that. So I wish everybody I was doing a shared green practice test got the question 24, but Dean said bad miss. You know, I, I, I had she's a very senior person I was tutoring. And when she get a wrong answer, sometimes I do this. I haven't done it to you, Andy, but I did it to her there. I go, now. And about, I don't know, we're like about that sixth time I went, she just lost it with me. She goes, that is the rudest thing I've ever heard, Dean. And if it was, anything other than securities, I'd be inting you all day long. You want to talk about technology? Oh my goodness. I mean, people get pretty fragile when they're studying for. I guess I should say ding, ding, ding when you get it right. Guarantees on insurance products.
Mm, I'm not too sure on this one. I have to guess. So I think A.
Uh, yeah, they are allowed. When if you are you're as a banking person selling a banking product or an insurance agent selling an insurance product, we can use the word guarantee. I say,
Okay.
Andy, my insurance company is guaranteeing that this is going to pay you a monthly income if you annuitize, or it's going to pay you X
Mm,
number of dollars when you die.
okay.
By the way, I don't care about that question. This is, insurance questions are very lightly tested. I mean, and most of the questions you're going to get are about variable annuities. So I wouldn't worry at all about this. But there are two nasty words we never use in the securities industry. In the securities industry, we never use the word guarantee and we never use the word approve.
Mm,
You want to hear the word guarantee, you need to talk to a banker about a banking product or an insurance agent about an insurance product. An agent, that's Andy, is permitted to open all the following customer accounts except
D.
yeah, come on, that's a huge red flag.
Hmm.
An analyst comparing revenues with expenses is most likely analyzing
Now let's compare.
I always think the best way to proceed on these fundamental analysis questions is to think about your own personal situation. So I say, Andy, how much money do you got coming in versus how much money do you have going out?
D.
Not capitalization. Capitalization is about equity and debt on the balance sheet. This is about
I think that's what
cash flow.
I was confusing. Like I remember capitalization was equity and debt. I was thinking of like, I don't know,
Yeah,
like
this is called your cash flow, right? Money coming
mm,
in. That's your top
okay.
line versus money going out. That's your bottom line, right? So capitalization would be equity and debt,
Hmm. Okay.
shareholder equity and debt. So what's the total capitalization of the company? Now, listen, I wouldn't worry too much about fundamental analysis and balance sheets and income statements. You know, my YouTube channel is now going into its fifth year, and I probably had 3 years where I had nothing on the channel about balance sheets because I just didn't
Hmm.
think it was material to your success. Now there's lots of things, but it's kind of like margin. It's not a target-rich environment. So I don't, I wouldn't worry about margin. I wouldn't worry about partnerships, and I wouldn't worry about fundamental analysis, and I wouldn't worry about insurance. Right? Those are not target-rich environments.
Hmm.
A new offering has a green shoe.
A.
Yep, good job. Excellent.
Hmm.
That's exactly right. Right. We can expand the deal. If I have good
Hmm.
customers, I say, Andy, good news. I have a green shoe. I'll exercise it. I'll be able to get you some more stock. KPL Corporation is considering having the stock listed on the New York. Who will make the final decision as to whether it will be listed on the New York? I always think of the New York Stock
He's
Exchange.
always got me.
I always think,
Uh,
Andy, of the New York Stock Exchange as a club, right? So if you're going to join a country club, who makes the ultimate decision about whether you get to join the club or not?
so, uh, just I don't know why these always confuse me. I'm just gonna stick with A.
Yeah, it's A. It's
Yeah.
the New York says, sorry, I just
I
finished
feel
a,
like I feel like those questions that seem so obvious always make me
well, be
overthink.
careful. Yeah. Now, I just finished a book called She Wolves, and it's about legendary ladies in the securities industry. Some of the first ladies, one of the first lady members of the New York Stock Exchange is Muriel Siebert. And boy, the boys were upset when she was able to get her membership, right? I mean, you
But
know,
yeah,
hopefully,
definitely I need to be careful those because I know sometimes I get questions where the answer seems too obvious and I
yeah,
start
well, you trust your
overthinking.
gut. You got to trust yourself. Got to trust. Don't outsmart yourself, right? I have a saying, Andy. Here's the saying for you to take to heart, Andy. When you are thinking, you are sinking.
I
If
like
you are
that.
thinking, you are sinking, right? It shouldn't take you too long to either come up with the right or wrong answer here.
Uh-huh.
More importantly on the test is to know that the New York Stock Exchange is an auction order driven market.
Hmm.
whereas NASDAQ is a negotiated quote-driven market. That's the big thing. 38 yield investor places 25,000 and a single premium, oh, a keyword qualified deferred variable annuity. 20 years later, the account is valued at 72,000. The investor withdraws 50,000. The investor is in a 25% marginal income tax bracket. The total tax liability is.
I'm just doing some math here.
Yeah, you're pretty good at the math.
I'm gonna go with A, 17,500.
Yeah, well, tell me, walk me through your math.
So what I did was, um, well, first of all, I see 20 years later, which is 58-year-old, so he's
Excellent.
gonna be charged at 10%.
Perfect. Yeah, that's excellent, right? So you caught
So
two things. Yeah.
qualified, the entire withdrawal is taxed, so that
Perfect.
would be taxed by the 35%, by
Perfect.
35%.
Perfect. 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 I mean, I love it. Now be careful. Be careful because that said non-qualified, right? Then 25,000 would be your cost basis.
Mm-hmm.
Right? That would be a different answer. So
Mm-hmm.
excellent. Good job. Well, you're really good at the math. You're beating the tutor on the math. You're getting to your answer before I do. The price of which of the following securities is determined based on supply and demand?
This would be B.
Right on. Very much a test question. Excellent. We're going to torment you on the difference between open-end and closed-end funds, and this is the biggest testable distinction, that they don't have an NAV plus sales charge kind of thing.
Mm-hmm.
Supply and demand. Peyton has been a client of Turing Technical Analytics, a Fender member broker-dealer for 10 years. He's decided it's time to move the account to a new firm. This is very testable. Enigma Mathematical Portfolio Modeling. Which of the following statements adequately reflects the requirements of ACATS? And ACATS is very testable.
Um, Wait, let me make sure I'm reading this right. Oh my gosh.
Yeah. The grammar here is kind of
And
atrocious. So what you basically have to know on the test, and I'll tell you right now because it has nothing to do with answering this correctly. The biggest test point is to know you have 1 business day to validate, 3 days to transfer. And so now you have to decide who is it that's going to validate and transfer. Is it Turing Technical Analytics, TTA, or is it EMPM that's going to do that?
I'm gonna go with A.
Yeah, you missed this one because it's
Mm.
actually, that's the new firm, right? So it's the old firm that gets the transfer instruction form.
Oh, I thought it was like asked.
Right. Yeah, so this was
I
I think the
see.
grammar on this question is atrocious. I'm not worried about this at all as your tutor because on the test it's just 1 business day to validate, 3 days to
It's
transfer. I don't
transfer.
care that you missed this based on the poor grammar, but basically the transfer instruction form is received by TTA, right? They're the ones who
Mm.
get the TIF, and then they have the 1 day and then 3 days to transfer. If we didn't have that rule, by the way, I would never transfer the account. I would just say,
Mm-hmm.
"Oh, I'm working on it, Andy. I don't know what to tell
Yeah.
you." Right? So it used to be
Yeah, these
so
long these
frustrating to me when people would not get this done in a timely fashion. Not a bad miss at all. All following information must be included on a municipal securities confirmation, except
D.
D. That would not be on that. It's the extraordinary call provision, the catastrophe call. The catastrophe call need not be disclosed
Mm,
under MSRB rules. The catastrophe call would be found in the trust indenture. Right? We are
okay.
going to tell you whether these securities are fully registered, which means, Andy, you could say transfer and ship,
Mm-hmm.
or whether the securities are book entry. There is no physical certificate to transfer and ship.
Okay.
Andy, the state has you on the books and they'll send you the
Mm-hmm.
appropriate checks at the appropriate times. I'm not going to call this a bad miss. I'm not going to call it a bad miss because I think it's pretty much minutia, but this is very testable
Okay.
to know that a catastrophe call under MSRB rules need not be disclosed.
Okay.
That's the big test to take away. Where do we find the catastrophe call? We find it in, again, big time test fodder, the trust indenture.
Okay.
The trust indenture is the covenants, promises, resolutions between the municipality, the issuer, and the bondholders for, in case they default. So, anyways, not a bad mess. Yeah, I don't care about this question, but I do care about knowing that.
Okay.
That's also known as a catastrophe call. The other one, just one more thing you should know is that if this is a muni bond at a premium, we have to quote yield to call on the
Okay.
confirmation. Royal Duck Manufacturing is located in the United States. It exports about 25% of its high quality down overcoats to distributors in Canada. To protect against currency risk, the RDMC should. We have a memory aid for questions like this. You know the memory aid for this?
Yeah, it's Epic.
Yeah, exporters by
Okay.
puts,
So C.
importers by calls. And so Royal Duck is an importer or an exporter?
Uh, Exporter. So C.
Yeah, good job. Boom.
Mhm.
All right. I don't know why I'm joking, but I mean, I'm not sure the Canadians are going to be buying much from us. So much for my duck down business. The common stock of porcine meat products is currently selling at $60 per share. It has a PE of 12 to 1 and pays a annual dividend of 3.
Mm-hmm.
What that would make porcine's earnings per share equal to? Kind of interesting. A lot of ways to do this. When I get questions like this, I always think of my third grade math teacher, Mr. Bruner, and I think, okay, we're solving for the unknown.
Um, let me see. Oh my gosh, I completely blanked on the
Yeah, you're
formula
pretty
for
good at math. You're pretty good at math. So
okay.
I would, gather yourself because I'd be surprised.
Okay.
If you miss it, it's going to be because you can't set up the math. But I've been
Yeah,
pretty good at math.
when I do miss math problems, it's always because I get too confused with all the like
Okay.
the
Okay. So here's how I
okay,
would
let me
proceed.
see. The
So we
common
know that when we take the price, which is given,
$60.
and we divide by the earnings, which is not given,
Mm-hmm.
we get 12. So 60 divided by something equals 12. The dividend here is just here to mess you up. It has nothing to do with answering this question.
So let me see. Let me let me reread it slowly because
Yeah.
I'm like confusing myself. The common stock currently selling at $60. 5.
Excellent.
Yeah.
Excellent. Now, if I asked you to do current yield, you would take 3 divided by 60.
Yeah, that
Right.
one I
Be careful. And I think,
out of all the videos I've watched of yours, the one I remember that you say is always remember the current yield formula.
yeah, yeah, no, well, be careful. They
Um,
don't let me lead you astray.
I think because I don't know why I saw the annual dividend of $3. I was like thinking like, do I have
No,
to
that's why
include
they're
this
baiting
somewhere?
you.
And then
So,
yeah, I
yeah,
know I was like throwing myself off.
that's right. They're trying to do the Jedi mind trick on you. Which of the following accounts are billed a single fee for a group of services?
This is B,
Yeah.
wrap
Are you
account.
taking a 63, Andy, or 66 next?
66.
So that means you're going to be able to offer wrap accounts to customers. Say, hey, would you like to wrap the products and services of our broker dealer or an investment advisory firm into a fee? Which of the following governmental bodies receive the least amount of their revenues from property taxes? I like this one.
Which of the following governments? Mm, I think this one is governmental bodies receive the least. I feel like I'm being tricked here. Which of
Well,
the
don't be looking for the tricks, particularly test prep vendors are more trying to trick you than perhaps the test itself. So don't bring that kind of a feeling into the test. The test, is not trying, and you might think they're trying to fail people or trick you, but they're really not. Whereas test prep vendors are trying to sometimes have what I call gotcha question. This is not a gotcha question. So taxes are the price you pay for civilization. And the
Mm-hmm.
way we pay for local government is through property taxes.
Right. I think okay, I'm actually I think I A.
Yeah, state governments
Yeah.
are financed
Okay.
with income taxes.
It took me a little to like put that
No, that's all
together,
right.
but then
That's fine.
yeah.
Andy, I'm coming to you off grid from my off grid location, and I moved. This is my third month now. I moved from Las Vegas, following my brother out here as kind of my last adventure with my brother. But he cracks me up because he says, Dean, can you believe how low our property taxes are? I said, well, Chris, the reason our property taxes are low is because there's no civilization here. It's just us. I mean, I have a solar array, and I'm off grid. It's not like there's anything to pay for, right? I mean, I before I moved here, mom is 80, and I was really not sure about making the move because I take care of mom. I said, Mom, here in Las Vegas, if something happens, and over the years, two or three times we've had to call 911, and boy, that fire department is here, Johnny on the spot. They're, going to help us get you to the hospital, whatever. I said, if we go off grid and something happens, it's going to take somebody 40, 50 minutes to find us, right?
Oh my
So
gosh.
you get what you pay for is what I was telling my brother.
That's very true.
All the following may occur during a mandatory 20-day cooling off period, except.
A.
Yeah, you're not supposed to solicit, right?
Mm-hmm.
Yeah. How is a preliminary prospectus red herring different, Andy, from a final prospectus?
Um, the preliminary prospectus, well, obviously besides the fact that you can share it prior
That's
to
right.
it.
That's right. You can use it to accept. I say, Andy, I'm going to send you a preliminary prospectus, a red herring. It has pretty much everything you need to make a decision
Mm-hmm.
about whether to invest or not, but it's missing test question, the final offering price.
Okay.
That's pretty damn important about, what
Mm-hmm.
you're going to pay for the stock.
Mm-hmm.
That being said, I can use that, Andy, to accept very testable indications of interest.
Interest. Okay.
Are those binding or non-binding on customers?
It's non-binding.
Non-binding, very testable. Which of the following securities cannot pay a dividend? I don't know why this is kind of a stupid question, but we should be able to get it.
Um, let's see.
Yeah, that was
Yeah.
stupid. I don't even know why they.
Yeah. See, it's
This is
like
when I,
question.
Andy, like you as a tester, I go, am I missing something here?
No, yeah, yeah. That's what I was reading, and I'm like, this seems too easy. I don't know why they would say.
As a requirement of making a particular business investment, Your customer just signed a statement attesting to her annual income and net worth and affirming that the risks associated with the investment are understood. The signed statement was submitted with the intended investment amount will either be approved or disapproved. Approval allows the investor to subscribe to the investment. Which of the following investments would have such a requirement?
Um, so just based on seeing the lengths you have to go to, I'm gonna
Yeah.
go with B.
You are correct.
Yeah.
Right. And it's definitely testable to know that direct participation programs, AKA partnerships, have a lack of liquidity.
Mm-hmm.
And that's one of the risks you need to understand.
Mm-hmm.
Which of the following regarding taxation of CMO's interest is true?
B.
Yeah, fully taxable, right? And we had a question like that earlier. A registered rep is recommending to his client a newly issued debt security backed by the U.S. government with a maturity of 7 years. This security is most likely
A treasury note.
Yep, boom. Listen, I don't say this very often, but I'm going to say it to you. 100% pass rate on the recommendation I'm going to make to you. Every night and every morning, I want you to go into your bathroom. I want you to look in the mirror and I want you to say, "Mirror, mirror on the wall, who is the greatest Series 7 test taker of them all? Andy, Andy, Andy. Ugh."
I
Because
like that.
pretty damn good in this stuff. So I just wish I could get rid of that little lisp in the voice. Like, is it E? I'd like to say it's B. Even if
I
you're
feel like
wrong.
I feel like I always answer that way even when I'm test taking
Well, that's
alone in
okay.
my kitchen,
Listen,
just because I think like in my head I'm
I
like
know. And
trying to like
listen,
prepare for the worst.
I'm not asking you, Andy, as a tiger, to change your stripes. If you are who you are, and you're doing great. So that's the only point. I think, you should have no reason to not have confidence, but based on how you're performing thus far. A customer of a FINRA member firm submits an order to sell 100 shares of stock at 43. The customer receives a trade report indicating that all of the shares were sold at 42.95. What should the registered rep do?
So, a D.
Yeah, anytime they can say, should you report something to your supervisor, that's the answer, right? So, even if you miss your mark, and your supervisor says, your principal, why you miss, you say, I think every time they said, should I check with you? I said, yes. And I think even when it was the wrong answer, and your principal's going to say, that's the right answer always. You just go back down there and you keep answering, come check with me, right?
Mm-hmm.
Your client, Mr. Brown, owns 400 shares of Acme Shoelace common stock. He returns your many calls on March 24th. General Shoelace made a tender offer on March 4th of $75 a share, which is above the prevailing price. Given that your client is likely interested in the offer but missed the initial communication, what question he ask you now?
Um, uh, D.
B,
D.
D. Yeah, there you go. That's exactly right. How long are tender offers open?
This one I'll be honest, I forgot.
It's 20 days.
20 days. Okay.
20. It's actually 20 business days. So
Okay, 20
so
business days.
yeah, and then remember if you they amend the offer and say they're going to give you more money or less money, then it has to remain open for 10, and you can't short into the tender offer.
Okay.
You have to own the security as well. If ABDC Mutual Fund has a $25,000 break point on its Class A shares, where the sales charge goes from 5 to 4, which of the following purchases would most likely represent a break point?
This one.
By the way, I should say breakpoint sale because breakpoints are good. Breakpoint sales are bad.
C.
Yeah, that's the one
Yeah.
closest to the breakpoint being under, right?
Yeah.
What should we tell this customer, whether it's 18 or 24, what should we tell somebody who's under this breakpoint? I say, Andy, there is a way to get the reduced sales charge up front.
Hmm.
If you will fill out
This is a
a
wait, I
letter,
know it, of intent.
that's right, which is good for
90 days?
13 months,
Oh,
you
13 months.
backdated 90 days.
Oh, okay. Oh my gosh. I
So
always
that
get
means that's
those.
good. It's up there. It's up there. A quote of 2.20, 2.18 would most likely be the quote of,
This is I don't know, I'm blanking on this one. I'm wait, a quote and it's I feel like I'm blanking on this one, so I'm just gonna take a
well,
guess.
yeah, just guess and move on, assign it to the universe. That's fine.
I'm just gonna say oh my gosh. I'm just gonna say B.
Yeah, you missed it. It's a T-bill. T-bills are issued, traded
Oh
at,
my gosh. I was gonna say T-bill.
yeah, yeah, it's a T-bill.
I should have gone
Remember,
with my gut feeling.
always, 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 there's no reason for you not to, particularly based on your performance. So we should probably make a little hashtag on when you don't trust your gut. And I think we would find that more often than not, when you trust your gut, you're getting it right. Your flash response, and when you don't trust your gut, you're getting it wrong, right? You're outsmarting yourself. An investor's portfolio has a beta coefficient of 0.85. If the overall market declined 10% over the course of the year, the portfolio's value has likely,
Um, I'm gonna go with B on this one.
what are you going with?
B.
You're correct, right? So this is less volatile than the market. Beta is a measurement of volatility as compared to the market as a whole.
And it's if correct me if I'm wrong, is alpha like the
Alpha would be if
return?
we did alpha would be excess performance over beta,
Okay.
right? So,
Mhm.
if I tell you it has a beta 1.5, market went up 10, it went up 10.5%,
Okay.
right? And then beta would be anything above that, or alpha
Okay.
would be anything above that. So just definitional questions. You nailed it. Beta is a measurement of volatility as compared to the market, the S&P 500. Alpha is excess returns over beta.
Okay.
An investor purchased 200 shares of Hightown National Bank at 120.06. 13 months later, it pays a 15% stock dividend. Oh my goodness. 3 months later, after that, the investor sells the shares received from the stock dividend at 112.57. The tax consequence to the investor is.
Okay. Let me see. I have to write this down.
Yeah,
I
take your
feel like
time. You're pretty good at the math. So assuming you can do all the math, there's some math involved here.
these long questions always.
I'm with you. Now, good news is your tutor I think you have what I call a margin of safety, Andy, that I think that regardless of the draw you get, whether it's a dream draw, which I'm wishing for you, everything you studied shows up, or whether it's a face of death draw and you're struggling, I think you're still going to be able to take down that draw. And that's the place to be in. So what that means is even if you miss this one, or if you just want to guess B in a sign of the universe, I think you're fine. Now, the only time I would guess B in a sign of the universe is if it's like question 90 and we're running out of brain power. Or then we might want to make a strategic kind of choice to say, okay, I'm gonna, give this one up.
Okay, let me see. I feel like I know what I'm doing, but I'm getting stuck somewhere.
Okay, so let's go through the math. A lot of ways to do math. I think what I would have done is first figure out what is my cost basis. So I would have taken 200 shares,
Times
yeah, times like a
120.
station, yeah. And that would give me
Just
what is called my cost basis, 200 times 120. Oh, six,
hmm
right? And so, did you get that number? Did you do that?
Yeah, I got the 24,012
Okay, so let's put that there. I'm gonna trust your math. You've been good at math. 24,000 what?
and 12.
And 12. Okay, so now I've got the cost basis, and now I got to
hmm
figure out how many more. Ooh, Dean's got a typo there.
Oh, yes.
That's not 2,000 shares. Let me fix that.
So from
Okay,
there,
now we got to figure out how many more shares are we going to get,
mhm, I
right?
got
And how do we do that? So
200 times the 15%, which I
right
got
on.
30 additional shares.
Yeah, there you go. So your math so far is pretty good. So not a problem. Times 15%. Let me put that so we can see it. Boom. And you are correct there. You said that's 30 shares.
Yes.
So, okay, so now we have a total of 230 shares.
Uh-huh.
So now we got to figure out what is our adjusted cost base per share. There is no taxable event to receive the stock dividend.
Uh-huh.
And now we got to figure out what my adjusted cost base is. My original cost base is still 24,012,
Uh-huh.
but now it has got me 230 shares. And so now I have my adjusted cost base. Did you just get this far? Is this where you were at in your math?
Yes. And then I got a
Okay, so 204
104.4.
12 divide by 230. And what'd you get for that?
104.4.
Listen, so listen, I don't know what your struggle was here. Maybe it's just connecting the dots, but now that is what we call, let's just label that, our adjusted cost basis per share.
Oh, I think I got it.
Right.
Okay.
Okay. So now we're, like I say, a lot of work for this point, but
Mm-hmm.
right. So there's our adjusted cost base per share. And now it tells me that my sales proceeds, right? Now I got to figure out I sold how many shares here. We didn't sell all the shares. We sold 30
30.
shares,
Yeah, correct.
right? At this is going to be my sales proceeds at
One.
112.57. Did you get that far?
Yeah, and then
Excellent. So that's called
mhm.
sales proceeds. So sales proceeds is going to, oh, by the way, I don't have to do that total. I could do it per share or total. Lots of ways to do
Mhm.
math. I just was looking at my math and I thought, well, maybe I can just do this because I'm kind of lazy on math. So, I kind of always try and look to figure out there's a way for me to not do all the math. So I think what I would have done here is say, okay, my sales proceeds is 112 per share, and my cost base was 104.40 is my cost basis. And whoop, And so it looks like I made this amount per share. Did you do that math?
Yeah.
And
Um, I think, uh, well, by the end of it, I got a, um,
what was your answer?
I got A.
You're correct. I don't know why
Yeah.
you listened. That's correct, right? So if Dean was following you, so far every time on the math you beat your tutor. That's pretty good, right? So you're ahead of me. So now what I would have done is taken that and times it by the 30 shares, and you're correct. That's the answer I would have come up with, right?
Okay,
So,
perfect.
boy, for you, you should dream of lots of practical application questions. Now, because the good thing about math questions is there's no interpretation about the answer.
Right.
Now, by the way, thank God we didn't guess B and assign this to the universe because you got the right answer. Right. So, that's better. So I'm not saying we indiscriminately start assigning things to the universe, right?
I think for these long questions, when there's like several math steps
Uh,
involved, I feel like I got it, but there's always that one point in the middle where I'm like, wait,
okay. Well,
like,
you remember
yeah, I
you
get
did
it. And
do
then it like snaps back like after a while. I'm like, okay, I
well,
think
that's
I
okay. That's okay. Because remember, usually when people miss the mark on the test, it's not because they ran out of time. It's because they ran out of right answers.
hmm
So you have the time to do the math, read the question again, say, okay, am I comfortable with my answer, right?
hmm
One of your customers has become nervous about a current stock market conditions and calls to discuss the matter with you. Which of the following would not meet regulation best interest definition of a recommendation?
Um, I'm a little stuck on this one, so I'm just gonna
Yeah,
go
this
with
grammar is atrocious. So
so,
they're asking you which of these is not a recommendation to a customer. So I would do process of elimination. I say, Andy, we need to reallocate some of your equity. That sounds like a recommendation to me. Our
I-
top analysts tell us the market's going to strengthen. I don't think I told you to do anything there. I say, hey, Andy, we need to liquidate some of your losers. We need to do some harvesting of your tax benefits. That
so
$3,000. It's not time to sell. Hold what you have. Again, I am telling you to do something, right? So A, C, and D, I'm actually telling you to do something.
oh, I see. But because B is someone like it's just saying that an
Yeah.
analyst is that's not
Yeah.
really
Yeah, it's not a record.
even if it's coming from um
Well, if I either
the
follow
registered.
this up by saying, and we should take advantage of this downturn to, buy some more stock. Boy, Andy, we're such in an age of uncertainty right now in the stock market, particularly. And it's interesting, I feel sorry for investors who have maybe like being too much time on their hands to be watching the markets and do those things because, boy, it can really, buffet you around. One guy comes on and says, this is a buying opportunity. And another guy comes on and goes, yeah, get rid of what you got. So, you're like, what is it? One of your clients has a margin account with the following balances. Long market value of 50, debit balance of 24. Short market value of 40, credit balance of 65. The account will be at minimum maintenance level when?
Oh my gosh.
Yeah, I'm with you. You remember
Okay,
what we said the key to doing margin questions, if you choose to do them, is the classical margin equation.
mhm. So let me try this here, see what I can get.
Yeah.
Okay, so I have 26,000 for the actual equity.
You're
And
correct. And
then
so, well, I mean, it says minimum maintenance. So, right? You were correct. And then we have our short account, and our short market value is 40,000.
Hmm. I
And
think
that we need
let's see.
30%.
Oh, okay, I see. Let me. Sometimes I like to look at the answers to see, because
I
sometimes
think that's great. I call it RTFA, read the full answer set. You're on the right track, by the way. So you correctly told me that over here we have this is what the setup looks like. And you were correct. Right? You told me that was 26,000 in equity, and you were correct. These are the classical margin equations, right?
hmm
And then we're going to go over here and do our classical short equation setup. And it tells us the credit balance is 65 minus,
65 minus the 40,000 is 24.
and so over there, this is, I think, the most hellacious kind of a question. This is what we call a mixed margin account. And remember
So,
this from grade school, you can combine like things. And so here we have a total equity of $51,000 in combined equity. This is saying the account will be at minimum. So they're not asking me what is maintenance. They're asking me how far down could this account go before we would have a problem? And how far up could this account go
mm,
before we would have a problem? Right? This is called market value at maintenance. And to calculate market value on maintenance, we take the debit balance, which in this case is 24 grand. We divide by 0.75. I get $32,000.
and then for short market value, it's the
That's right.
credit
So,
register.
yep. And by the way, if we didn't want to do that, this is salacious. We might have decided just to guess B and assign this to the universe. I don't think it'll cause us to miss the test, but I had a Merrill
So,
Lynch guy. He was working so hard on margin. He kept calling me every day with another margin question he wanted to go over. I said, I don't mind doing this. You deserve the right to have this done because you're working your ass off and you're going to pass. I just think, there's other things you could be doing. And I was really
mhm.
surprised that he actually took my advice. I thought I'd hear from him another 7 days of margin questions. Anyways, I'm just shopping my answers at your point, right? So I
uh,
know it's now C or D.
I got I got D.
Okay, well, let's see. I haven't done the math. Well, once again, you're ahead
Let
of
me
the
just
tutor. So
double check before I.
65,000 divided by 1.3. I get 50,000. You are correct.
So, what would you say I know you said margin is not like a big thing,
Yeah.
but just in case, 'cause you never know, they might throw something in there. What would you say are some like
Very
key
testable to
words?
the documentation, the credit agreement.
Uh-huh.
I have a lecture you can watch on the YouTube channel, Andy, and I titled it "Don't Overdose on Margin."
I love that.
And I tell people if you watch that, I think you're fine.
hmm
But you got to know the documentation, the credit agreement, the hypothecation agreement, the loan consent form, not
hmm
optional. You got to know the $2,000 trick. Are you familiar with the
hmm
$2,000 trick?
I don't
If
think
you open a
so.
new margin account, the minimum deposit
Oh,
is
yes, yes.
2,000
Uh-huh.
or pay in full. So I mean, it's pretty straightforward.
Well,
Almost always people confirm that. I had a guy the other day, he took exception to what I said. He goes, "Well, how do you know that?" I said, "Well, listen, if I told people not to worry about it, and then, Andy goes down there and gets 20 margin questions, she's going to call me and cuss me out and say, hey, you told me not to worry about it. I had 20 of them." So
I was gonna ask, what would you say are some key words to kind of kind of set apart what they're asking for in a margin question? Because I think that's what I struggle with. Like when I see margin
yeah,
questions,
yeah. So this would have been
like
easy to miss.
I saw maintenance level and I immediately thought like, oh,
Yeah.
maybe I
So
have to
yeah,
do something with the
will be at,
25%.
will be at, right? So you said you like to read the answer sets. I'm with you. And I like to read sometimes the last sentence first. So when I'm reading that last sentence first, so I know where this question ends up. It says the account will be at minimum maintenance level when? I say, okay, they're asking me where the account will be at minimum maintenance. They're not asking me minimum maintenance. They're asking me what will the account be at, right? So that's a different question, right? So that was the key
Hmm.
phraseology here. So last sentence, read the paragraph, right? Now, I'm not sure if we did 25% of 50, which would be what, 12.5, I think. And we did that. That's not an answer available to us. So that would be the other reason to change course and direction here. If it's
Okay.
a practical application question, a math question, which you're pretty damn good at, and your answer is not there, well, then you got to go back and look again and say, okay, what am I, what math am I missing here? Right.
Okay.
So definitely. I'm giving you a hash mark on that one because we did that together. A significant increase in which of the following types of orders may cause a bull market to accelerate. I like this. So bull market means the market is going what?
Up.
So what can add more fuel to the fire in a good way?
Um, mm, I hate the buy limits and short and sell stuff.
Well, remember, slobs over
Um,
bliss. So it's got
mhm,
to be an order that would be triggered if the market goes up.
which
So
is
what order? So you have a buy stop, right? You tell me,
mhm.
Dean, if the stock trades at or through, I want to buy it. So as the market comes up, all these buy stops get triggered or elected, and that adds more fuel to the fire. And buy stops can accelerate a bullish trend.
Oh, I need to work more on
Well,
the
you said that.
trend.
That could be on your list.
Yeah.
Remember, we're at question 51, two questions on orders, right? So we've had two questions. We've actually had, we'll see if we get more margin. We've had more margin questions, harder than we would expect on the actual exam. And now we've had two types of order questions. The other version of this on the test is which of the following types of orders might cause a bear market to accelerate? And that would be a sell stop,
Stop. Okay.
right? So that's okay if you want to review it. I mean, you got plenty of time for cleanup too, right?
Okay. Yeah.
Yeah, I mean, so
Okay.
good news, we're not doing this. I don't think you're at risk based on your performance thus far. And we still have another, what, week and a half for cleanup? Or,
To
so, I
tighten
mean,
up. Yeah.
so yeah, we're in a good spot. The Securities Act of 33 applies to all the following except
Um, registration yes. B.
yeah, you can get these right. I like this. You got it correct, right? By covering up the screen. Are they asking about paper prospectuses 33? Are they asking about people and places 34?
Mm.
Right. And so insider trading is not 33. 33 is registration new issues, paper and prospectuses. C, prospectuses. D, full and fair disclosure on new issues. Absolutely. Good job. Tax preference items are used for the purpose of computing the alternative minimum tax. They include in plain English, what tax preference means, Andy, is that for most taxpayers, these would be tax advantages to you, tax deductions. But if you're subject to the AMT, then you lose the ability for these preference items to become a tax advantage or to be deducted from your tax return.
Include. I don't remember too much on this. I'm just gonna take a guess here.
Okay, what's your guess?
Um, I'm just gonna go with let me just I'm just gonna go with B.
What, by the way, B is the best guess, and you are correct. So when you absolutely have no clue, your
I
best
kind of
guess
just
is
went
B.
with it because it seemed a
Yeah.
little odd that it was
I
only
don't worry
three
about, yeah,
three
I don't worry.
options.
Yeah, I don't worry about this one at all. The one I worry about is the industrial development revenue bond. So that one you should know, right?
Okay.
So it would be an unsuitable recommendation if you're subject to the MT for me to
Mhm.
recommend to you a private activity bond, also known as industrial development revenue. So I wouldn't worry about this particular question, But as it relates to the AMT, I would know that a unsuitable recommendation for an investor subject to the alternative minimum tax is an IDA, Industrial Development Agency bond, or IDR, Industrial Development Revenue Bond. The current yield with a bond with a coupon rate of 7.5 and selling at 105.5 is approximately,
So this is I got C.
you got C is
Hmm.
correct. I would be awful surprised you're junior you didn't get that right. You're pretty good at practical application. An investor in the 28% tax bracket is considering purchasing either a 4% muni or a 5% corporate bond. Which of the following statements regarding the two bonds after tax yields is true? Wow, I don't think it'll be this complicated, but this is certainly testable, deciding what recommendation makes more sense.
So for this one, it's so weird because I know the formula, but for some reason I
Yeah.
always get confused on which one to use, like the
Oh,
either
yeah. So you're either going to multiply or divide.
yeah,
I
either
think the
the
easier one for me is to go for the taxable yield first and then figure out how much of that yield I'm going to lose to taxes and go that way. And if I'm going to go that way, there's a couple ways to do it. One way I could proceed is by, and I told you I like to kind of look for the question and see if there's a way for me to kind of avoid doing a lot of math, is I like to say, okay, well, 5% of the corporate bond is $50. Do you see I got the $50?
mhm.
And I'm in a 28% tax bracket. So I'm going to lose $14 to taxes. So there's my $50. I'm going to lose 28% of that. So I just took 28% times 50, and I'm going to give the US government 14 of that. And that means I'm left with an after tax return of $36.
Right.
Now, by the way, if you want to do the math, your point, if you wanted to do the math, you could, the formula, you could take the taxable yield, 5%, times 100%
100%
minus the
minus the
tax
tax
bracket,
bracket.
which in this case would be 0.72,
Mm-hmm.
and you would come up with 3.6,
Mm-hmm.
right? Or you can just say, I'm losing $14, however you want to go.
Uh-huh.
That's the same math. If I took 50 times 0.72, now I'm saying you're left with $36. It's the same math. But if we're going from taxable yield, let's just label this, to tax-free equivalent, right? This is a taxable yield. And I say, well, that's not really a yield you get to keep, right? Because you're going to pay taxes. And so in your bracket, now, if again, your point about the math, I told you I like to avoid the math. So now this 4% muni, I say, okay, that's going to be $40 and you don't have to pay any taxes, right? So I could say $40 and I could put minus zero, right? Because it's tax free.
Mm-hmm.
You get to keep it all. And so now, instead of memorizing all those formulas, I just say, okay, well, what would be better for my client Andy? $36 or $40, which is better?
Definitely the 40.
Yeah. So I say in your tax bracket, we should buy the muni. Okay, now let's go to our answer set. By the way, the other way you could do that is you could take the 4%, your point, and divide by
By
100% minus the tax
minus.
bracket, and you get 5.5. And 5.5 is better than 5.
Oh, I see. Because I think what was confusing me was that I knew the formulas for both,
Yeah.
but I every time I would get like when I would see the question and the way the answer like was worded, I would get confused which one was for like which
Yeah. So,
formula was for
well, that's
which.
what we're doing. So we just did the taxable equivalent. We said the taxable equivalent is 5.5, and 5.5 is better than 5.
Mm-hmm.
The other way we did it is we said you get to keep 40, and here you only get to keep 36. So here the muni is the clear winner,
Mm-hmm.
right? So now let's see. The two bonds are equivalent? No.
No.
The yield, don't ever tell me you can't figure it out on the test. That's never the right answer.
Okay.
The municipal bonds yield is higher than the corporate bonds yield. Boom, right? And
Mm-hmm.
the takeaway is that means this guy should buy the muni bond.
So if I see a question, because I've come across questions where it doesn't say like 4% muni bond or 5% corporate bond. It just mentions like,
Yeah, no, no. So they could just point blank say, what is the tax-free equivalent to a 5% corporate bond and tell you 28%, and you'd have to come up with 3.6.
so when they mention only like, for example, if they only mention like the
Yeah,
corporate bond,
if
that's when I would be using
multiply.
the
That's right.
multiply. Oh, okay,
To
okay,
go from
that's
to go from taxable to tax-free equivalent, we multiply. To go from
okay.
tax-free to taxable equivalent, we divide.
But then once, so then suppose it only said corporate and then we got like the
Well, if
five.
they give us the corporate right here, if we did the
Well,
math, then we
uh-huh.
get 3.6, and that becomes the basis of our recommendation,
Oh,
right? So
I
I
see.
say in your bracket, getting 5 and paying taxes is the equivalent to getting 3.6. So if I got a muni paying 3, it doesn't make sense. If I got a muni
Oh, I
paying
see.
4, right? So now we just use that as our benchmark to decide
Uh-huh.
what the customer should do,
Oh, okay.
right? So
Hmm.
4 is better. And here, if we looked at this and it was 3, we'd say you should buy the corporate,
Okay.
right?
Makes
So we're
sense.
just compare using that as our benchmark to say what we should do. An economist is comparing yields on the 20-year U.S. Treasury bond and AAA corporate bonds with the same maturity. The economist is analyzing.
Apparently use for 20 years. See?
And now duration is volatility. It's called the credit spread. The credit spread always means
From
difference.
FasterCapital.com.
Ziggy,
In the
cancel. Um, in the context of the bonds, when we're comparing, spread means difference, and we're comparing the difference between high quality debt and low quality debt, that is called the credit spread.
Okay.
Right. And duration is about volatility. I don't feel bad about this one at all as your tutor. I don't think you're going to see this. When you take your 66, it becomes more testable. But this is called the credit spread. If the credit spread is widening, by the way, that's a negative leading economic indicator.
Hmm.
If it's widening, if it's narrowing, that's a good indicator. All the following are trade reporting and compliance engine eligible and require reporting except. So Trace is about reporting within 15 minutes, both sides of the trade report. It's to provide transparency in the bond market.
Um, A.
Yeah, it has nothing to do with the primary market. It's about the secondary
Yeah.
market.
Hmm.
Which following statements regarding Ginnie Mae is true?
Uh, D.
Yeah, there's 3 test questions about Ginnie Mae. None of them. What'd you say, D?
Yeah.
Yeah, you missed it. It's A, but who cares? I think this is a stupid ass question. And here's why I think it's a stupid ass question that none of this is testable. It's testable about Ginnie Mae, test question number 1. Andy, it's the only investment on your test that pays interest and principal monthly.
Hmm.
That's testable. Andy, on your test, it's fully taxable. That's very testable. Third and final test question on Ginnie Mae is that unlike the other government sponsored enterprises, Ginnie Mae has the full faith and credit of the U.S. Treasury. So they pay interest and principal monthly, they're fully taxable, and they are directly backed by the United States government.
Mhm.
Now on the test, Andy, I'm not going to let you rack up 3 points on that. So whenever there's three of a thing, I just gave you three of a thing. They love to say, here we go, test question. All the following are true of Ginnie Mae except, right? And we don't know what the D thing is, but it's not correct. Choice A says they pay interest in principal and Leo. Yep. Choice B says they're fully taxable. Yep. Choice C says they have the full faith and credit of the U.S. States Treasury. Yep. And then D
Mhm.
will be the answer because it will be something that isn't true about Ginnie
Okay.
Mae's. A municipality has pre-refunded its bond issue maturing in 5 years. This would mean all the following except.
I'm gonna go with B.
Yeah, you're correct.
Mhm.
This is raising money in advance of the call date, right? Pre-refunded.
Mhm.
We're going to put the have an escrow account. The main test question about this is that the person who owns the bonds that have been pre-refunded are not going to receive yield to maturity. The bonds are going to be called. Excellent. Interest income and all the following are exempt from state and local taxes, except.
I'm like D.
Excellent.
Mhm.
Government-sponsored enterprises, Fannie Mae,
Mhm.
Freddie Mac, Ginnie Mae, are fully
They're
taxed.
on all three levels, right?
That's right. That's
Okay.
right. The U.S. Treasury, the state and local, your state and your local government would like to tax you on interest you receive on Treasury securities, can't.
Mhm.
Federal government can and does, and D is the answer. So good job. Stock undergoes a 1-for-5 reverse split. Reverse split. Which of the following increases?
I know one of them for sure, but
Yeah, and
I'm
that's
kidding.
the whole point of the process. So as your tutor, I'm happy you know one because that's the big
Mhm.
deal. I wouldn't worry about the other, right? But the whole point is to make the stock go from, if we do a 1-for-5 reverse and we were $1, now we're $5.
Yeah, the market price goes for sure
That's
goes
the whole
up.
point. Yes,
Uh-huh.
you're absolutely right. So it's either B or D. So now you got to decide, does the earnings per share go up or does the market cap go up?
I'm just gonna go with B.
C or D? What are you going with?
I said
B or D? I'm
B.
sorry. B, you're correct.
Yeah, yeah.
Right, that's the whole point. By the
Uh-huh.
market cap's the same because market cap is market value, number of shares by market price, right?
Uh-huh.
So good
Okay.
job. Good job. Customer account records such as new account must be maintained not less than.
Be maintained for um B.
Yeah, excellent.
Uh-huh.
Excellent. The way I think of
I had
this,
to read that
yeah,
carefully.
yeah, arbitration statute of limitation is 6 years. That's how I remember it. I
Mhm.
go, okay, well, the statute of limitation is arbitration is 6. I better keep that thing because I might see this person and I need to have my documentation. A customer wishes to buy a January 40 call and write a January 45 call. At the time of the order that you would place, the options are trading as follows. I kind of think this is a fun one.
Customer wishes to buy one. Mm, I think this one is. I think this one is C.
You are correct. You're pretty good at the math.
Yeah.
Love it.
I
Uh,
Is it because it's the highest
that's right. Customers
ask?
always pay the high price. They always receive the low price.
Okay. Yeah.
For the 40 call that you're buying, you're paying 4.35, and you receive the low price when you sell, and that's 2.25. So we simply net the buy 4.35. You looks like I'm not surprised. Looks like you did the arithmetic correctly, and you correctly said this is a debit spread.
Mhm.
So this is a debit spread. My next question for you, Andy, and then we'll take our break. We're about halfway through. We'll take our 15-minute break. This is a debit spread. So
Mhm.
do you want these contracts to be exercised, or do you want these contracts to expire?
For debit spread, um, I know it has to widen.
I was going to ask you that next. You're correct. If I was going to ask you next in this debit spread, do you want the difference to go from 2.10? That's the difference now. That's why it's called a
Uh-huh.
spread, the difference.
Uh-huh.
Get larger, and you were absolutely right. You want it to widen. If I call you and say, hey, the spread's now 4, do you want me to close it out for you, Andy, for a gain?
Mm-hmm.
If it narrows, I say you want, hey, it's 1. You want me to close it out and be a loser? No.
No.
Right. So widen, you're correct. I asked you, do you want these contracts to exercise or expire?
To exercise?
Yep, yep,
Yeah.
there you go, right?
Yeah.
Debit exercise widen. That'd
Yeah.
be wonderful. If these are exercised, you'd be buying the stock at 40 and selling the stock
Mm-hmm.
at 45.
Mm-hmm.
Is this spread bullish or bearish?
Wait, I'm sorry. Can you rephrase can you
In
repeat the
this
question?
spread,
I
is
think
your
I'm,
customer bullish? Does your customer think the XYZ is going up? Or does your customer think XYZ is going down? Is this debit call spread
oh,
or bearish?
uh, this is bullish.
You are correct.
Yeah.
Because you're long the lower
Yeah.
strike price, the
Yeah.
dominant leg is the 40 call.
Sorry, sometimes I just have to relook
No,
at the
no, no,
question to make
don't be
sure.
sorry for anything. Listen, you're doing great. You're doing fantastic. Nothing to be sorry for. Listen, if anybody understands how much dedication, discipline, and organization it takes to be performing like you are, it's me. You have nothing to be sorry for. I mean, I wish all test takers would put in the work that is evident in your performance thus far. Hoping I'm not jinxing us, right? But no,
No.
all right. What are we going to use for the break even? We know the break even's got to be somewhere between 40 and 45.
Hmm.
So all the action takes place between 40 and 45.
Uh-huh.
There's 5 points to be made or lost. So are you going to use cal or push for your break even?
Um,
Call stands for call, add to the lower.
yeah, I know. I was gonna say because I know the way I had it like written a certain way, so I kind of like
That's a,
embedded it in
not
my.
a problem. Not a problem. Not a problem.
So I know that for debit spreads, it's the lower
That's right.
strike plus the
There you go. 42.10 is your break even, indeed.
uh-huh.
Right? You're
And
going to get the 40 plus the 2.1 you paid. You bought the
uh-huh.
spread, 42.10. And remember, you're bullish. So anywhere above there, you're a winner.
Okay, sounds good.
Right? The gain is going to be the difference, right?
Hmm.
5 minus 2.1, $290. Excellent. All right. So time for our 15-minute break. We're about halfway through. Let me just put our recording on pause. Unless instructed otherwise, when customers purchase common stock in a cash account, your firm holds securities in street name. One of your customers requests the DRS program for registration of their ownership. This means
Um, this is D.
it's actually B, but who cares? You said D as in dog?
Yeah.
Uh, yeah, it's actually B, but who cares? It's in the
Mm.
customer's name, but the company who issued the stock has them on the book in book entry form. I wouldn't worry about that at all. In most cases, a mutual fund is structured as a corporation because of certain tax regulations important for the fund to compute its net investment income. This computation is, who cares? I'm going to let you answer, but the test question that I know you know the answer to is whatever that computation is, what is the minimum amount they have to distribute under subchapter M or the conduit or the pipeline theory?
Let me see here.
The big thing is die 90. Die 90. The dividends on the stock in the portfolio plus the interest on the bonds in the portfolio minus the expenses. That's the die.
Mhm.
Memory aid device 90.
I think this, didn't go over this too much. I think this is D.
You are correct. D is in
Yeah.
dog. And that 90%
Hmm.
is very testable. There's another investment vehicle,
Hmm.
very similar, like a mutual fund, professional management, like a mutual fund, diversification, and like a mutual fund, it must pass through 90%. You know what that other investment vehicle is? Kind of like a mutual fund, but it too has to pass through 90%.
Is this I think it's something with real estate, right?
Yeah, it's a
Real
REIT.
estate.
It's a REIT. I
Yeah,
could
REIT.
remember, Andy. I'm making
Yeah.
come up with a stratosphere on the test. It would be excellent. But instead of being a diversified portfolio of securities, diversified portfolio of real estate investments. Neither neither one of them pass through losses. When an issuer of a preferred stock, uh-oh, exercises the call, is usually a price somewhat above par. The excess over par is
Issue preferred stock. Isn't I feel like I'm overthinking this.
or maybe you are.
Um,
Yeah.
it,
Almost every time you ask, are you overthinking it? The answer is yes.
isn't this just A?
Yeah. Yeah.
Yeah. Okay. Oh my gosh. I don't
I
know
hope
why
I
I'm
hope you
overthinking.
remember me telling you,
I
hey
feel
Andy, do
like
you think you're overthinking it? You are.
I feel like I'm so like traumatized by the way like
No,
Kaplan tries to
I get
trick
it.
me.
You got PTSD on the series.
Yeah, and I'm like, oh, I don't want to be like too like confident,
No,
and
no,
then
you
like,
got it. You got it. A customer purchased a hunt or 10 ABC nines of 2045
mhm,
convertible debentures at 99. The debentures
mhm.
are callable at 101. The conversion ratio is 40. Sometime later, the debentures are called while the common stock is trading at 24 and the debentures are trading at 98. Which of the following options would be most beneficial to the customer?
Let me see. Uh, I'm just doing some math here.
No, take your time
Uh,
on the math. You're pretty good at the math. As your tutor, I think every time you say I got to do some math here, I think you're going to get the right answer. And that's what we want to think on the test, right? Get some math question, go, all right, woohoo. Practical application. By the way, that would be the same answer to an actual customer. Andy, what should I do? You said, well, let me do some math.
So what I'm doing here is, you could correct me if I'm wrong.
Mhm.
Um, so I converted to see what
That's right. I would think
we
you're on the right track. So 40 shares at 24. Where'd you go when you did that?
um well since the conversion ratio is 40, I did the 1,000 divided by 40 and I got the
Oh, you
25.
didn't? No, 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 no. You didn't need to do that because here they didn't give you the conversion price. You would have done that if you needed the conversion ratio. But here they actually gave it to you. Now, maybe lots of ways to do math. So when you got 25, I'll let you finish up. Maybe this will work. I don't know. So you just had the conversion price is 25. That's correct.
Hmm.
Okay, so now what'd you do with that number?
Oh, I see. Okay. I think I see what I did. Um, okay, let me try this again. Okay. I think for this one I'm gonna go with A.
You're absolutely right. It's
Hmm.
A. I say
Because
1,010 is better than 40 shares of a $24.
yeah, yeah, that's what I see what you mean now. I don't know why
Well,
I
okay,
guess I got confused with the, but
you
then
probably
once I
listen to
realized,
me. You probably listen to me too much because I always tell people first thing you got to do is take par, divide by the conversion
yeah, I was listening to you.
to establish the conversion
But then
rate.
yeah, once I did the 40 times 24, I like realized.
I like it. All the following are considered non-public arbitrators except non-public arbitrators except. So one of these people is going to be on the side of the securities industry. I'm joking, but I mean they're supposed to be impartial, but
Um, would be considered.
so all of them will be considered non-public arbitrators except. So one of these persons is a public arbitrator. Three of them represent the securities industry.
Wait, when it's I know you mentioned it would be someone that doesn't represent the securities industry.
Now you got to be careful on these excepts. So it says all of them are non-arbitrators except non-public. So what that means, I'm now putting the question in a format that I'm easier to deal with the grammar, is that three of these people are considered non-public arbitrators. One of these is a public arbitrator, I guess with the except, right? So one of them is public, three of them are not.
Uh, I'm gonna go with A.
You got it right. That's right. Susan is not somebody involved in the securities industry, right? She works at Microsoft or Oracle or Google.
So non-public arbitrators are people that are involved, like
Yeah.
are or
So Joel
were
is an
involved.
attorney. He solicits clients in disputes about investments. That's a guy who's in our business. We may not be like him, but he's in our business.
Even if they're not a part of it anymore, but were?
Yeah, yeah.
Okay.
When you're tainted, you're continually tainted, right? I haven't been a practitioner in years, but I would show up on the arbitration panel as a securities industry person.
Okay,
And
makes
by the way, I
sense.
would still be impartial, but you may not want me there. You go, ah, man, I wonder who Dean is more important to Dean,
Uh-huh.
Morgan Stanley or the client, right? Oh, of course, I love Morgan Stanley, right? An investor purchased a zero coupon bond and the initial offering. The price was 50. The bond's maturity date is 10 years. At maturity, this investor will have, I like this question.
I'm gonna answer this with a little question mark again if I
Oh,
don't.
you always do. I expect that it is.
Um, I'm pretty sure this is C.
You are pretty sure
Yeah,
correct
because
because you've already
zero
done it.
coupon bond it
You've been doing
is
the accretion every year, right?
yeah. And
Excellent. Excellent, right? Um, what was the adjustment, the accretion each year? Well, we're making $500 over 10 years, $50 a year. So year
mhm,
one, you pay taxes 150, year two, another 50. So you paid your taxes already.
yeah.
An investor purchased a corporate zero coupon bond on the offering price of 51. The bond matures in 17 years and has a yield to maturity of 4.04. 7 years later, sold at 73 and three quarters. What are the tax consequences of the sale? Very
Let's
similar
see.
to your last question.
Yeah. Um, this is bunch- wait, I did something wrong here because I'm getting a answer that I'm pretty sure is it, but I'm just off by like a
Okay, well, I
number.
would have taken 1,000. Did you do this? 1,000?
Yeah,
It's
minus the 5,
5 tens. That's
10,
490. Then I
and
would have
then
divided by 17.
and then
That's
times
470.
7 years.
Yeah, so let's see. I took 51. Even I rounded a little good here.
So
5,000 minus
I got
equals
um
490. Then I'm going to divide by 17.
uh
That's 20. I get 2882, whatever. And then it says I held it for seven. So I'm going to times by seven.
mhm.
So I should have already written the bond up by 201.76. You see, I'm
I
getting,
got C.
I don't know. I haven't finished the math yet. Let's see.
Oh, sorry.
You're usually quicker than me on the math. So let's see. Now I'm going to plus 510. So my adjusted cost base is 711.76 is what I get. And so it looks like I'm going to have what you say? You said a loss?
Um, let me just double check my math here.
I think
Uh,
it's going to be a gain based on my math. Let me just see what my math says.
Sorry, let me just,
No, no,
because I
maybe you're
have a
right.
lot of numbers here.
I'm with you. So
Um,
I think it's going to be a gain because I'm
oh,
cost base here. So I'm going to minus 73 to 750. I get a gain of $25.73, which I rounded up because of my rounding. So I'm going to go whatever is closest to my LED display. What did you say?
let me see here, because I have 73.50. Let me just start this over here.
Yeah, yeah. So what I did first was take
490 times
1,000 minus
17
510, and I got 490. So now I took the 490
divided by the
divided by
17.
17 years. And then I got that what that is going to be each year, which is 2882. Then I times it by the 7 years.
That's what I did too.
And then
So then you
that's what's called my adjusted cost base. That my adjusted cost base is the 510 plus the accreted amount, which was 201.70.
one.
That's my cost basis, and I netted that with my sales proceeds.
I think I was just getting something a little off because of the rounding.
Yeah. Okay. So what'd you say though? What's your answer?
Let me just see here. And then I'm almost there. Sorry.
No worries. No worries.
7, 3. Is this A?
Yeah.
25.
Excellent. Excellent.
Okay.
Which of the following callable municipal bonds on a 7% basis is most likely to be called? I like this question.
Most likely to be called.
This is a judgment question.
I see this question a lot every time I take a practice exam, and I can never remember
So the yield
the
to maturity.
concept behind it. So,
So if I ask you, what debt do you have, Andy, in your life that you're going to pay off first? You say, Dean, I'm going to pay off the debt that I'm paying the most interest on, right?
well,
So if you have 4 credit cards, they have balances on them, which one
uh-huh,
are paying off first? The one you're paying the highest, what?
interest on.
So that means it's either A or B, right? The issuer wants to get rid of the bond they're paying the most interest on. Okay, say,
So,
Andy, 2 of your credit cards have the same interest rate, but one has a prepayment penalty. If you have to pay it off early, you got to write them a check for $200. The other one has no prepayment penalty. So I say, Andy, you're the one most likely to be called because they're paying you the most interest and there is no call protection. They're callable at par. Bond A, there is some call protection. There's a prepayment penalty. If they call it away from you, they're going to have to pay 1,050.
mhm,
So the bond most likely to be called is the bond
where
that
they
is,
don't have to do that.
that's right. Or another way to attack is the bond at a premium. And you could have done it that way. You could say, well, if the bond's basis is the fancy word for yield to maturity.
So in
And
this
so
case,
if all these bonds have a yield to maturity of 7, it's less likely the bond that is paying 6.5 is going to get called because that's less than today's rates,
uh-huh,
right? So you could have gone to the bond at a premium. That still gets you to A or B. And then you got to decide which one has call protection still, right?
I see. So in this case, because th it the 7.5 coupon, but they're calling it at 100,
Yeah,
it's
the issuer would prefer to write a check for 1,000,
in rather than the
1,050.
premium.
That's right.
Okay.
That was a tough one. Tough one. I liked it though. I liked it. I'm putting the hash mark that I helped you on that one. The phrase not prime would apply to a bond with a Moody's rating of. I'm laughing because I just think it's kind of a stupid question.
The phrase not prime would apply to the bond with Moody ratings of um I gotta be honest, I didn't review much of the
You
the
shouldn't.
standard
This is a stupid ass question. This means junk or high yield. And on the test, it won't be Moody's. It will be Standard and Poor's and it'll be double B. On the test, this is an aim and shoot point and click question. It's going to say below which Standard and Poor's rating are bonds less than investment grade. Below triple B,
uh-huh,
bonds are less than investment grade. Investment grade, not investment grade. Investment grade, not investment grade.
uh-huh.
So stupid question. Stupid question. Um, Boeing was triple B with negative outlook. Wow. Negative outlook. That means Standard and Poor's
Wow.
told Boeing, next stop for you guys is double B, and then you're going to be high yield junk and you need to borrow money, and that's going to be bad.
Oh my
Oh,
gosh,
you should
yeah.
do something to shore up your balance sheet. Boeing ended up selling $30 billion worth of securities. Your point earlier,
Wow.
you got this right, working capital. So they sold the securities for 30 billion. That shows up in working capital. It doesn't show up in current liabilities because there were bonds and stocks
Mm-hmm.
and so Standard and Poor's said, okay, if you got $30 billion, we think that'll get you through this strike and your problems with your planes. And I'm like,
Mm-hmm.
oh my God, talk about problems. The Investment Company Act of 1940 has two types of management investment companies, the closed end and the open end. Which of the following is the significant difference between the two?
Okay, let me see. So this I'm as I'm pretty sure this is D.
Yeah, you're correct.
Yeah,
Almost every time you're pretty
because
sure, or
uh-huh.
you say, I think it is. You're right. You're right. A school teacher has a 403B tax qualified deferred retirement plan into which she has deposited $100,000 over a 12-year period. At retirement, she withdraws the total value of the account, now 220,000. How much of the withdrawal will be subject to taxation as ordinary income?
If I'm not mistaken, I think because I
Yep.
I confuse my my retirement plans a lot, but I think for 403B it's only the or the
Has
amount.
has the school teacher paid any taxes on that 100,000?
Let me see. Tax qualified deferred. Wouldn't wouldn't this entire amount
There you
be
go.
taxed?
Right? Now be careful. This was not a tax qualified.
Uh-huh.
This is called a tax sheltered annuity.
Okay.
You get tested on who gets this. By the way, it's not just the school teacher, it's any employee of the school district,
Uh-huh.
any employee of a nonprofit can have these pre-tax things. Now, if this had been a tax deferred annuity, not a tax qualified, something you didn't do through your employer, you just put 100 grand in, then you'd owe taxes on the 120.
Okay.
All right. So that's the key word there. If it's a non-qualified, the answer is B. Qualified, the answer is C. Non-qualified, you have a cost basis of 100. Non-qualified, you have a zero cost basis. And reviewing prospectuses and registration statements, the SEC
They don't.
Yeah, that's a
Approve or
nasty word.
disapprove.
That's right. Can go to
Uh-huh.
jail, right? Don't say
Yeah.
that. Oh my God. You said this earlier, and I like it. Sometimes I just like to read my answers first and say, okay, there's got to be something about a time limit of some sort,
Yeah.
right? So, in light of many cases involving variable annuities where there has been a failure to supervise egregious unethical behavior, FINRA Rules 2330, members' responsibility regarding deferred variable annuities evolved. One of the specific concerns that the regulators have with deferred variable annuities is sales personnel recommending an investor switch from an existing contract to a new one. In the case of variable annuities, these exchanges are typically done under 1035. One of the factors in determining the exchange is suitable is whether they've done another exchange within the preceding.
Determine the exchange suitable is whether I feel like I'm getting two timelines confused for this because
Okay,
I
well, yeah, there should be a name and shoot point and click question. And even if you're going to
because
miss it,
I already eliminated two.
two of them. Okay, so what are you on now?
Um,
What two
right.
did you?
I eliminated A and C.
Okay, so you're still in the game. You got a 50-50.
Concerns existing contract to a new one.
So yeah, I mean, I'm not
Case
saying
of
we should guess,
variable
but what do
annuity.
you think is more makes more sense for a compliance officer that I have something that's 30 months or 36 months, 2.5 years or 3 years?
I think I'm confusing this with because I know that there's a specific rule with annuity surrounding the 36-month mark.
There you go. Yeah, that's the answer.
Uh-huh.
That's what the red flag is.
But the reason why I was a little, and maybe you could clarify that for me just in case I don't make
Yeah.
a mistake if I do come across something like this. I think the reason I was kind of egging between B and D was because isn't there also something with 12 months with annuities like some,
I'm not going to think offhand. I mean, we could find something later, but the 1035 is very testable.
or am I thinking about I might be thinking about I something with an IRA for 12 months like
I don't
roll
know.
how many times can
Well,
you
you roll
like
over, in a 12-month period, three is the number, right? Or once.
oh okay that's what I was thinking of.
Well,
Okay.
that's okay. Well, good
Perfect.
news. I say, no, the good news, Andy, is it's all up there in your brain housing group. We
hmm
just got to work on delineating it. But again, you're not at risk. You're doing great. So,
hmm
and as I said, I know how much work it is to get it all up there to begin with, right? You've laid the base, and a lot of times people, I just told you the shared screen practice test I did the other day, he had not laid the base. So there's no sense in us doing a practice test because he doesn't have
Uh-huh.
enough base. You have enough base knowledge to pass the test. And if not pass the test, at least in these kind of questions, know what you're being asked and know what your answers are being offered to you.
hmm
It doesn't mean we're always going to get them right, but it does mean that, as I said, we're in the hunt.
Right.
A bond dealer that quotes a concession of a half to another dealer means,
Bond had to another dealer means um I think this is A.
yeah, it's $5, right? A
Yeah.
bond point is 10,
Yeah.
and the increments of that would be an eighth. So a
Yeah.
half
So
of
half.
$10 is $5. Absolutely. All the following regarding CMOs are true except. All the following are true of CMOs except.
Okay, let me see. Uh C.
Yeah, right on. Good job. They pay monthly or however the
Monthly,
mortgage
yeah.
passes. Yeah, good job. A client invests $50,000 into an equipment leasing program. The program raises $1 million from the sale of units and borrows an additional $4 million on a non-recourse basis. Unfortunately, the equipment is leased to a company that files for bankruptcy, and due to the poor maintenance of the equipment, $1.5 million is realized at foreclosure. Your client would be able to claim a loss of.
B.
Yeah, you can only lose what you put in, right?
Uh-huh.
That's the great thing about being a limited partner. You're only at risk for your investment.
Uh-huh.
And then the non-recourse means they can't come at you for more than the 50.
Mm-hmm.
As the poet Robert Burns wrote, the best laid plans of mice and men often go awry. The same could be said for investment plans. The term used to describe those things that have an ability on our plans to reach fulfillment is,
Investment constraints.
yeah, that's what keeps us from getting to our destination, right?
Uh-huh.
Institutional communication is not filed with FINRA as would be required of retail communication. Nonetheless, the producing such content should still,
Oh, sorry. I want to make sure I got the last one right. It was investment constraint, right?
yeah, you got it right. Oh, I hit the wrong button. My
Okay.
bad. Good, good, good catch. Good catch.
I was like, maybe I got it wrong,
No,
and I'm
you
thinking of
said that
something
right. You did say investment constraints, right?
else. Yeah, investment
Okay,
constraint.
good, good. Institutional communication not filed would be required should still, so
It's not 500. None of the member proves you should still. Oh, let me see. British. C.
have written procedures for the education and training of the representatives. You are correct, right? Boom. Treasury inflation protected securities offer which of the following benefits to an investor?
Um, this is 3. I mean, I'm three. C.
Yeah, yeah, there you go. Oh, excellent.
I was thinking 1 and 3. I said
Yeah,
3.
no, that's all right. That's all right. Investor purchases an OID on the fall offering and holds it to maturity. The IRS treats the accretion of the discount as,
Investment discount generally. Um, purchase. I think this is a.
oh, that was just an accident. That wasn't me telling you the answer.
I mean, I was stuck between A and D.
You should never, there's no such thing as long-term capital gain unless we actually sell the bond. We haven't sold the bond.
Oh, okay,
So the
okay.
accreted amount is income you're receiving, but because it's a muni, A is the right answer,
Okay.
right? Because that's imputed interest is from a muni. If this was not a muni, it'd be a different story.
Okay.
Well, the individual has established a trust and named you as the trustee. Oh, wow. If you wish to establish an account that permits the trust to engage in margin transactions, which of the long statements regarding margin is true?
Um, D.
It is not permitted. B as in boy, is that your answer?
Um, no, I said D.
There you go. That's
Yeah.
correct. D as in dog.
Uh-huh.
I need to get my ears checked. I can't I tell you how many times I'm doing these with people and they say D and I think it sounds like B. I just, I, yeah. Variable rate municipal bonds are subject to all the following risks except, I like this one.
I'm gonna go with D on this one.
Yeah, as
Yeah.
interest rates go
Uh-huh.
up, so does the payment.
Yeah.
Absolutely. Regarding convertible debentures, one characteristic with which your client should be aware of is that
Let me see. It is really best to convert when the company. Sometimes I read from the last
yeah.
answer to the
Oh no, I like
top.
that. I like that too. Sometimes the reason I like that as a strategy is it keeps you more engaged, and you don't. That way, you made sure you read all the answers because sometimes you get people get mad at this, but you can get marked wrong for the right answer if there wasn't a better answer, right? So
Hmm.
people read B and they go, "Oh, that's great," boom, and they move on and miss that D was a better answer. So I like going bottom up. You don't miss any of the answer sets available to you.
I'm stuck between two answers, but I'm gonna go with
This is a tough one because it's kind of more of a judgment question.
Ventures. One character which a client should be aware of.
I probably would have gone process of elimination. I should know that A is not true.
Hmm. I'm
B is
gonna
not
go with
true.
C.
Yeah, you're almost always right on those. Almost always. I can't think of one where you weren't right. All the following are money market instruments except,
D. D.
yeah, come on, that's a layup. The main purpose of dividend reinvestment programs of mutual fund is to,
This is B.
yeah, you should know that it's not to avoid taxes because you're still going to owe taxes on that. So
Uh-huh.
drips are very testable. That's called a drip, and they will refer to it on the test as a drip. That stands for dividend reinvestment program. And that's where you tell the mutual fund, hey, I don't need the dividends. I don't need the capital gains distributions.
Hmm.
Just go ahead and buy me some more fund shares. And the test question will be to make sure you understand that's testable or taxable. A customer of a broker dealer has opted to use share identification for tax reporting when selling shares. With this method of tax reporting, she'd want to identify the shares to be sold as those that have,
Be a customer of a broker dealer. Um, I'm not too sure on this one, but I think this is let me just see. I'm gonna go with B on this one.
the lowest cost base would be a higher tax. You missed it.
Mm.
You want to go with the ones you have the highest cost base because that would generate a lower tax.
Oh, I see. Okay.
Yeah, so you're on the back side of the question now. If you can't identify your shares, what will the IRS impose upon you?
So it's the highest cost basis.
That's right. So if
Um,
I'm your broker, I say, hey, Andy, we've been purchasing these shares over several time frames. So we have some shares at a low cost base and some with a higher cost base. And we want to sell some shares. What I would recommend is we sell the shares that we have the highest cost basis on using share identification. Now,
and
if we
and
can't do that, the IRS was going to impose on us FIFO, first in, first out,
and this is the highest cost basis generating.
generating the highest cost base, generating the least gain,
Oh, okay. Okay.
right? Because that's what we want to have the least gain because least gain means less tax,
Okay.
right? So if a customer wants to place an order for a specific mutual fund and provides the bonds, issuer, coupon, maturity, and CUSIP, but she has not disclosed her financial objectives or tax status, the representative must,
B.
Right on. Say, hey, that's your idea, not mine.
Hmm.
The official statement of new revenue bond indicates the flow of funds is based on a net revenue pledge. This means the first payments go, that's very testable. Which fund has priority? Which fund has priority?
Um, this is early pledge D.
Yeah, excellent. Very testable. Very testable. A blind pool offering.
Uh, D.
B is in boy?
No, D.
Uh, no, a D is just, I don't know what D would even mean. This is where we raise money. We don't tell you what we're going to do with it. These are called SPACs, special purpose acquisition corporations. Uh, think here, Trump social media. We had a blind pool offering. They used the proceeds to buy True Social from the president.
Uh-huh.
So that's what blind means. Blind means we're not identifying what we're going to be buying.
Oh, I see. And is it
Yeah.
that amount 25%?
Yeah. I see
Okay.
a guy, I don't know. I'm just making this up. There's a guy on CNBC all the time. This is Grant Cardone of Cardone Capital. I think there's a correction in the real estate market, and I'm participating, and I think you should too, Andy. I look for properties that have a internal rate of return of 7%, and he goes on and on and on. And he says, for more information, call Cardone Capital. Now, I don't know if I call him, is he going to tell me what apartment buildings he's buying or what hotels
Mm-hmm.
or strip centers, and then that would be more risk, more reward if it's blind. So the answer here is C. I wouldn't worry about this at all on the test, except to know that if you're doing a blind offering, not identifying assets to be purchased, it has more risk to the client. I say, Andy, trust me, you'll love it, right? Anacle Corporation raised $100 million of 100 par value a number of years ago. The stock pays a quarterly dividend of $1.25. I see questions like this, I go, bastards. What I mean by that is they give me the quarterly dividend. So in the back of my mind, I go, okay, I just need to make sure I understand that that is $1.25. That means it's a 5% preferred, right?
Mm-hmm.
So the minute they give me a quarterly, I'm going to just annualize it. Recent issues of comparable preferred stock pay 4. This one pays 5. One could expect the market price of Enacle preferred stock to be closest to. I kind of like this kind of a, one of those Mr. Bruner third grade math questions again.
Let me see.
You've been pretty good on the math questions. By the way, I told you I'm kind of lazy. So I like to do on the math, Andy. I like to do dead reckoning, and that's just my way of saying I'm trying to avoid the math to the last minute. I should know that if new ones pay 4 and mine pays 5, I would expect it to be trading at a premium.
Uh-huh.
So it's either C or D without doing any of the math.
Let me see here. These long ones with a bunch of numbers
Yeah,
always
that's
get to
okay.
me.
Take your time. Take your time. I told you, you're not going to run out of time on the test. You might run out of right answers, but not time.
I have to write this down. This.
Mhm. So we would expect if other ones are paying 4, this one should say be kind of 4. So remember current yield, AMP.
Uh-huh.
So to remember it, annual dividend or annual interest, AMP, that's the A, divided by market price. So if we're saying that if we take what it pays us, $5, and we divide by the unknown, the price, it should be something close to 4.
Let me see approximately. Uh, Okay, so 5. I don't know. I'm having a brain freeze. Um,
So we take 5 divide by 80. Is that close to 4%? We take a $5 annual app, divide by
mhm.
75. Is that close to 4%? We take 5, we divide by 120. Is that close to 4%? We take 5, we divide by 125. We would expect that in the marketplace, this would be trading at something close to 4 based on the other yields, right? That's the whole point. They're all going to be in that same data kind of set.
Let me see. I think it's around this question, like time mark, that my brain starts.
Okay, but that's all right. That's okay. So, Andy, do we know it's C or
Um,
D? Do we agree it's either C or D?
I think this is C.
It's actually D, right? Because if we take
Mm,
my calculator and I take $5, remember I got the 5 and I divide by 120, I get 4.1. That's close. And let's see if I take a 5 and divide by 125, spot on
oh,
4%.
okay.
That's okay. It's okay. Listen, you're doing great. This is the first one you've missed in quite a while. So we'll take it. We'll take it. Now, your point, if you are feeling tired, should we take another 10-minute break? That's what you should do on the real test. I'm okay. Either way, if you want to continue to march or you want to take a little 10-minute break, it's fine with me.
We can continue.
Okay. So, but recognize that in yourself on test date, right? What I mean by recognizing that is nobody's making you continue on. You can say, hey, I need to use the bathroom or get some fresh air. I mean, the clock will still be going, but go in the bathroom, splash some water on your face, whatever, or just at your
Mhm.
seat, just close your eyes. I'm gonna take a mental trip to Tahiti. Okay, I'm back. Guard your psyche. Make sure you have enough fuel in the tank to finish up. Which of the following must be in a readily available location for 2 years?
B.
Yeah, all of them, right?
Mhm.
What is record retention on a customer complaint?
It's 4 years.
Right on.
Mhm.
What is the record retention for customer ledgers and blotters?
6 years.
Oh, you are so good.
Mhm.
You are so good. Oh my God. An investor closed a brokerage account with a FINRA member for May 12th, 2017. Almost 4 years later, on May 5th, 2021, the same investor has a financial plan developed by a registered rep at a different firm. While examining the old accounts, the registered rep discovers a transaction where the individual handling the account, as well as the member itself, were negligent, resulting in loss over 100,000. The transaction occurred on April 30th of 2015. If the investor wished to make an arbitration claim,
Um,
it won't be this complicated on the test. On the test, this will be a name and shoot, point and click question about the the statute of limitations.
this
I
D.
think. I'm sorry.
D.
No, remember, well, it didn't ask you that. It didn't ask a claim may be made only if the customer signed a pre-dispute. That's true, but that wasn't the question.
Oh,
The
okay.
question is if the investor wishes to make an arbitration claim,
Uh-huh.
it's asking about statute of limitations, which is testable. It's just
Mm,
going to be an aim and shoot, point and click question.
okay.
So you said D, it's actually C,
Okay.
right? Remember earlier I told you that's why record retention of a customer account record would be 6,
6. Okay.
right? It's 6. That's not that you're wrong. It's just that that's not the answer to this particular question,
Okay.
right? I mean, once we start getting into the dates, that's kind of a hint that it's about the dates, right? But you're absolutely right. The customer, separate test question, has to sign the arbitration agreement. One of your clients passed away recently. The customer had an IRA with your firm and had his sister listed as a beneficiary. Other assets included the home and furnishings and a brokerage account. The title of that brokerage account was the customer and his son, joint tenants with rights or survivorship. The customer will specify that 100% of the assets should pass to the daughter. Based on this information, the estate settlement will have
Okay. Let me see. This is-
Course. I'm glad you asked. I'll notify you when it's available to you.
I want to make sure I'm reading this correctly. Customer
Ziggy cancel. Ziggy cancel. So he has a mind of his own sometimes. He just does.
Sister listed beneficiary. This is going to be B.
The daughter gets the home and the furnishings. You're correct. The son, the brokerage account, and the sister, the IRA. You are correct. Andy, how long does the sister have to take the distributions out of that IRA? How many years? If this was a spouse, there'd be no time limit about getting that money and having to pay taxes on it. But since it's a non-spouse who's inherited the IRA, test question, how many years do they have to distribute those assets?
I'm actually not sure on that
10
one.
years. So an IRA that is inherited, you have 10 years to take the distributions out of that.
If it's non-spouse.
It's not spouse. Yeah, a spouse can have forever, but if you're, and remember here it says it's the sister who got the IRA.
Okay.
One of your customers wants to alter an investment objective. She has said she wants to move her portfolio from its current objectives to one of concerted growth. I don't even know what that means. When you well then it does. When you ask her what that means, she has trouble explaining. You want both of you to understand one another clearly, so you explain that growth in an investment portfolio is commonly described as all the following except. Now that's kind of a weird question.
A.
Directed growth. This one's kind of weird. Let's see. I like that answer. Let's see. Conservative growth. I don't think there's such a thing as conservative growth. Moderate growth. Yeah, I think that's the best answer given the answers. I think you're right. I just think it's a stupid question. I can't imagine us getting a question like that. A customer buys 300 shares of ABC at 53 and writes 3ABC June 55 calls at 4. And the contracts expire on exercise. The customer's cost base in the ABC stock is.
It's B.
Yeah, right on.
Yeah.
And then the $1,200 is going to be taxable to you at ordinary income tax rates, right? So that's 1,200 you got to keep. Different question. If I asked you the break even, didn't. But if I asked you the break even, it would have been A, 49. So good job. Which of the following are characteristics of both stocks and rights?
B.
I'm sorry.
B.
B is in boy. You are
Yeah.
correct. You are correct. A very test will be able to contrast rights with warrants. Rights are short term at issuance exercisable below. Warrants are long term at issuance exercisable above. So excellent. 38-year-old investor places 25,000 into a qualified, keyword, qualified single premium deferred variable annuity. 20 years later, the account is at 72. The investor surrenders the policy. If the investor's in a 25% marginal income tax bracket, the tax liability is.
B.
Well, you're so quick on the math. Walk me through the math. You're correct again.
Because it's qualified.
Yeah,
The
right up. So
entire
72,
yeah.
have you seen this question? I hope you haven't memorized questions. Is that really you doing the math that quickly?
No, it is.
Oh, okay.
I since it's qualified and then
All right, cool.
38 and then 20
Excellent.
years later.
That's embarrassing. It's embarrassing that you're beating me at the math. Who cares as long as the math is correct, right? Which of the following are spreads? Which of the following are spreads?
I hate questions like this because it's always like a vision mind trick. Seeing all like these.
Yeah, I'm with you. This is a tough one. All question is only worth 1 point, but if I were in charge, I'd give you more than 1 point for answering that question correctly.
Let me see. Um, I feel like I'm being mind tricked right now.
Well, that's okay, Andy. So remember, we have a memory aid device. Soda, soda. Same option. Call, put. Different action. Buy, sell. Soda. Same option. Call,
Hmm.
put. So by the way, that means you can now eliminate Roman numeral 4,
Four, yeah.
right?
So I okay, so let me just reread one more time.
Same option, different action. We can eliminate 2 because that's the same option, but it's not different action. It's bye.
Mm-hmm.
So we've eliminated 4, soda, because we're looking for the same option. Call, put. Different action, buy, sell. So we've now eliminated 2 and 4. Let's look at
So
room number 1. Does it meet soda? Same option, call. Different action, buy, sell. Yes, number 1 is a spread. Soda. Let's look at number 3. Same option, call.
mhm.
Different action, buy, sell. So 1 and 3 are spreads,
Okay.
right? But test question number 1 about a spread is, can you identify it?
I feel like this one, like I definitely would know it. I think it's just like the structure of it. I really have to like
No, I'm with you.
read
I'm
it carefully before I like
tough,
click something fast. That's why I was like
tough,
rereading
tough,
it
tough,
over and
tough,
over.
tough,
But
tough. I'm with you.
yeah,
I agree.
I do agree with your answer though.
Okay. Now I have a question for you. Uh, is Roman numeral 3, what kind of spread is it? In Roman numeral 3, what kind of spread is it?
This is okay, let me just oh my God, I've seen this before.
Well, the only thing that's different,
Where I've it has the same
there you go. The only thing
strike.
that's different is the months. So Roman numeral 3 is a calendar spread.
Okay.
Calendar spread. Roman numeral 1 is a vertical or price spread.
So same strike, different months, calendar
Same
strike.
option, soda. Soda. Same option, call, put. Same option, same type of option, soda. Same option, different action. Buy, sell.
Okay.
Which of the following have equity positions in a corporation?
This is 1 and 2.
Yeah, this
So
is talking about
B, yeah.
capitalization, right? Capitalization.
Hmm.
If three individuals open a joint account with your firm and one of the party account possesses written authorization from the other parties to grant her authority to make all trading decisions, the new account form must contain information on.
And one of the parties. All three.
Right on. Libby sees a tombstone advertisement for a new issue of Southwest Barge subordinated convertible debentures. The bonds will carry a 7.25% coupon and are convertible in the common stock at 10.50 and are being issued to the public at par 100. The proceeds of the issue will be used specifically for purchasing new Southwest barges. Libby's concern about the issue could include which of the following?
Um, I this will be B.
Yeah, right on. Yeah, it's going to be junior to the secured debt. It's not secured. They're trying to trick you. The
Hmm.
barges weren't pledged as collateral, so it's B. Regis Rep has a client wants to save for college for a child. The child will be entering college in 5 years. This would be an example of,
An investment constraint.
yeah, time horizon, how long we have to get to our financial destination is a constraint, right?
Hmm.
I say, I wish Andy would have told me sooner, or we would have met sooner, right? Under FINRA rules, if a member firm wants to leave, I have the terms of a clearly erroneous trade adjusted, it must notify NASDAQ.
I have. I think this is D.
Yeah, you're correct. You're
Yeah.
always, when you think, you're correct.
Hmm.
So, I usually tell people when they're thinking, they're sinking, but in your case, that's not the case. An investor writes one ABS 280 put for 1660. The position is closed and the put is bought for its intrinsic value when IBS is trading at 265.25. The investor realizes,
I'm just gonna write this down because for
I
these
think you definitely should do that. Make a T,
I like to,
make a
yeah.
T, or get your break even and go from there. A lot of ways to kind of go proceed on this.
It just like helps me better kind of
Yeah,
like
no, like I say, you got to make sure you're doing this like you're going to do your test, right? If you do your test like you're performing on this practice test, no worries, man. You're going to make your mark.
this is gonna be A.
A. So what did you do on your T?
Let me just double check here.
No, it may be right. I told you I haven't done the math yet. You're always ahead of me on the math. So I'm just
So
asking how you did the math so I can determine, as I said, if you were right or wrong without Dean doing the math. And no surprise, I've done the math and you are correct.
so since we have the put that was written,
Yeah,
we get the
yeah,
premium.
that's right. It was a 280 put.
Yeah. And
And
then the
then you got
intrinsic
it.
value between the two was
Perfect.
14.75.
Excellent.
So
Excellent. You are a member who's the greatest Series 7 test taker of them all.
I like that. I'm gonna start
What
doing
does the
that.
mirror, mirror on the wall say that is? The mirror, mirror on the wall says that's Andy. When a limited partnership terminates, the limited partner's gain or loss is determined by comparing.
Um, gain or loss. A?
No, not A, it's your
No.
cost
Uh,
basis, right? So those are your distributions. That'll be on your yearly tax return.
oh, that's right. That's
But
right.
this is about it's D. So that's okay. That's the first miss in a long time. So under MSRB rules, a broker dealer must disclose control relationships.
For I think this is I'm stuck between B and D. I can't remember the exact rule on this.
Remember, a broker dealer control relationship is when I represent both the broker dealer and I represent the issuer. So, I'm the CEO of Morgan Stanley and I
Mhm.
sit on the city council. And then Morgan Stanley is going to underwrite bonds, right? So, that would be a control relationship. So now we're asking, when do we need to disclose that the CEO of Morgan Stanley represents both the issuer and the broker dealer? Another example of control relationship outside of munis would be Bank of America, Merrill Lynch. There's a control relationship between Merrill Lynch and Bank of America. When do I have to disclose the relationship of Merrill Lynch and the control relationship it has with its parent company, Bank of America? By the way, if you say A, I'm going to flunk you on the entire exam.
No, definitely not.
Your seat is going to shoot you into the ceiling, and they're going to say, "How could you, Andy, ever say we never need to disclose something?"
No, no, no. I definitely was not thinking A. Um,
Well, it would keep us out of trouble under regulation best interest disclosures of conflicts of interest.
I mean, I guess for everything.
Yeah, all
Yeah,
customer transactions.
yeah.
Securities traders would consider which of the following to be the most relevant indicator of expected market volatility. I like this one. Sometimes in the business, we refer to it as the fear index, the fear gauge.
This is the VIX
Yeah, the
index.
VIX, right
Yeah.
on, right on. A tool used by investment banking firms to combine several unsuccessful limited partnership programs into a new entity is
Tool used by investment bank to combine several. Uh, Merger?
no, it's a roll up. We're rolling them all
Oh,
into one giant.
I was going to say that, but I
That's a
was
roll.
thinking of like a merger, like when two.
Yeah, I don't think you're going to get the partner roll up question on your seven. Max compensation, that would be 2%.
2%. Yeah, that I know.
An investor has an established margin account with a market value of 6,500 and a debit balance of 3,750 with Reg T at 50. A maintenance call would be triggered if the market value decreased. Remember the formula for this?
So I'm gonna
Market
do, let me
value
see.
at maintenance.
Let me see if I can get this one.
Maybe I'll beat you on this one. You're usually beating me. Let's see if I can beat you.
I definitely think you will beat me on this one because for some reason, margin, my
Okay,
brain
I got
always
my answer.
it goes all over the place.
I got my answer.
Um, let me see. I don't know why my brain like becomes mush when it like
Well,
margin is
remember, you're doing great. So just remember the whole point of this shared screen practice test is kind of, talk about this, do an intellectual inventory. And as I said, give yourself permission, like at 112, if this is your actual exam, to go, to the restroom, take a mental trip to Tahiti because we're coming down to back nine. And what you really don't want to do is go off the rails at the end, right? As I said, the good news for you is that you do have a margin of safety. So, we haven't scored you up yet, but I think we're going to find even when I throw back the ones that, I'm going to take away where I helped you, I think we're still looking really good.
I don't know why I always get. So I know. Okay, so I started off with doing the 6,500 minus
Well,
the.
if I would have asked you maintenance, you would have taken 6,500 times 25%. That's not what they asked.
No, so I
But the
did.
other way you could have done it is just process of elimination. You could have kept plugging in all these market values until you get what I know it can't possibly be A because you're not going to have negative equity in the account. Right?
Hmm.
It's got to be something above, or excuse me, above 3750. All right. So if we take the debit register, what you owe the Morgan Stanley, 3750,
Hmm.
and we divide by 0.75, is that answer available to you?
Oh, I don't know why I keep like margin, I keep mixing up the like
Yeah.
way that I'm supposed to be doing it. Like for some reason I started doing 6,500 minus the
Yeah.
3750.
Yeah. Well, that was called this setup. And the setup could have been something we need to do, but not in this particular question.
Okay.
The MSRB has rules regarding quotations on municipal bonds. For which of the following customer confirmation would be required to show yield to call? I like this. This is very much a test question.
Rules regarding for which of the following the customer. This I think this is A.
A, it's going to be the bond at a premium. And so you missed it because that's a bond at a discount.
Mm,
So what this is really asking you is to find the bond that is trading
on a
at a
premium.
premium. So
Oh, okay.
redeem yourself. So which bond do you think it is? Now that I told you that, which bond do you think that is?
That would be B.
B, let's see, a 9%. There you go. That's the correct answer. Another teeter-totter seesaw
Mhm.
question. You only quote yield to call on a bond at a premium. Otherwise, you would quote yield to maturity. The way we say that is we quote yield to worst. Yield to worst. I'm just loading up my other system here because I think that person is going to be logging in here in a minute. I want to be able to tell her that we're going to be starting a little later. Well, for an off-grid guy, I got lots of technology. Customer purchases $5,000 worth of bonds, or 50,000, excuse me, 50,000. The bonds mature in 10 years and are callable 5 years at par. Under industry rules, the customer's confirmation will show kind of another very similar kind of question. Another very similar kind of a question.
Um, I'm gonna go with C here.
Hold on, I'm just trying to get things set up. There we go. In progress with you. C is incorrect because you should know it's yield to maturity. It's not that C is a bad answer, it's good, but we should know that at a discount, we're going to quote yield to maturity. At a premium, we're going to quote yield to call. Now, if I don't tell you the price of the bond, then you're correct. But I did tell you the price of the bond. So when I tell you the price of the bond, I tell you it's a discount, it's D, premium, it's A. If I don't tell you the price of the bond, then it's C.
Okay.
Right. So not a bad miss. Not a bad miss. If a customer opens a spread, so what's our memory aid device for a spread? Soda.
Hmm.
Same option, different action,
Different action.
right? So we got the same option, a call, different action. What is the total cost of this debit spread?
This is gonna be um I'm pretty sure this is
Well, you're good
B.
at math, so they're just hoping you freak out that it's a foreign currency option. It has nothing to do with it. You paid 230, you brought in a point and a half.
I think this is B.
Yeah, right. That's the difference between the
Yeah, I
two.
was thinking about the foreign currency and
They
then,
got you,
like
right?
it's
They're just hoping
something.
to cloud your mind on that, right?
I feel like that's my problem. I start to see something else in the question. I'm like, I don't think they're asking what I think it is.
Yeah. Now, I'm not sure why this won't let me open on a separate thing. If for some reason, I don't think we'll get an investor would sell a put.
Because he is bullish.
Right on. Yeah, right on. Register up interviewing a new client learns that the client has an investment objective of earning income and is willing to assume moderate risk to do so. The objective and risk tolerance of that client can be met by which of the following mutual funds? So it says earning income, moderate risk means the government bond fund goes out, and growth means the money market fund goes out, right? So I think one
Hmm.
way I like to proceed on these suitability judgment questions is process of elimination.
Uh-huh. I'm gonna go with A on this one.
You are correct.
Yeah,
Long an ABC 60 call and short an ABC 70 call is.
this is let me just make sure. 60. This is a debit spread.
You are correct. Right? Because you got lower, higher, longer.
Uh-huh. Yeah.
All these strike calls, right? A new client indicates the desire to invest in a highly speculative venture suitability, what? A highly speculative venture. Okay. Suitable only those with a significant net worth. The client assures you he has the financial ability to sustain the loss. You believe it's necessary to verify that's the case. What documentation would help you?
Um, C.
Yeah, we want to know, what it's hinting at here is that he's an accredited investor.
I was just laughing at the other three options.
Yeah, that's right. A no from a client's doctor, right on. This is one of those layups, right? ABC has a loss for the year. It's obligated to pay interest on all the following. This is very much a test question. You
This
only
is
pay
gonna,
interest when and if earned on one of these bonds.
this is C.
Yeah, income or
Yeah.
adjustment bonds.
Yeah.
Right, right
I
on.
always remember income and adjustment bonds.
That's right. Remember that trades flat, no
Uh-huh.
calculation of interest. Fill or kill means the order must be executed.
Let me see. I just like to carefully read. Fill or kill means that the order must be executed. Mm, I always get confused between these, the immediate or cancel and fill or kill.
Yeah,
Means that the order must be
that's what they're testing on you here is that.
in its entirety, but not immediately. I'm gonna go with C.
You're correct,
Yeah.
right? You want it all and you want it now.
Yeah.
Immediate or cancel would
Yeah.
be A. All or none would be B. Underwriters that reserve the right to stabilize the price of securities distributed to the public under an SEC registration statement may do so.
The right is reserved to stabilize the price of security. I'm not too sure on this one. I'm gonna have to take a guess.
Well, guessing is fine. You got to put something in the answer set.
Yeah. So let me just see. Underwriters are reserves the right to stay. A B.
You're correct.
Hmm. Sometimes I try to
Customer-
use like the best of like common sense to try to answer like with the
Mhm.
answers because it is saying reserve the right. I'm
That's right.
assuming
And
it's
it's got to
not
be
under
at or
no
below the public
circumstances.
offering
Yeah.
price, right? One of your customer had a sideline business that was just sold for 100. The customer's 47, wants to put the money in an investment that can be left alone for the next 20 years until retirement. Which of line is the most suitable choice for the customer?
I'm gonna go with A.
You are correct,
Yeah.
right? Target date,
Target
20
date.
years. Most ETFs are structured as open-end companies. However, they should not be confused with mutual funds. Very testable to know the differences between traditional open-end mutual funds and ETFs. Among the differences is that ETFs,
They track indexes.
oh, first time I've said this, bad myth,
Uh,
right? A difference is because we do have mutual funds that also track indexes.
mm,
It's asking you the differences.
oh, okay.
Right? There's a Vanguard S&P 500 fund that tracks the index.
Uh-huh.
You're correct. There are ETFs that track indexes.
Uh-huh.
And the key word here is difference.
Uh-huh.
Traditional open-end mutual funds do.
Oh, right. Oh my gosh. I don't know how I missed that.
That's a bad miss. I think I've said that twice.
Uh,
And so that's not bad. Most shared screen files we get more than two.
I think the good thing of you going ooh is that it's ingrained in my head
Oh,
now to
good.
not
Yeah. Yeah.
miss that.
Yeah. I guess I could. I go, eh. One of the forms of communication with the public described in 2210 is correspondence. One of the ways in which correspondence differs from retail communications is that. Now, earlier you had demonstrated your prowess in this, so I would be surprised if you don't get this one.
Um, it's the small like keywords on how they word things that
Yeah.
sometimes like throw me off. But I for this I'm gonna go with I'm pretty sure it's wait, let me just double Prince review may take place before D.
I'm sorry.
D.
D is in dog. You are correct. May review may take place before or after sending the correspondence.
I
Indeed.
was like looking at A and D, but I was like, no,
Yeah, they
because
look alike. Yeah, your point. So
yeah, if they're
the A
asking
looks pretty
for
good.
differentiation
Or
from
after
retail communication,
sending before. What are the difference? They look pretty much alike.
yeah,
A says before,
review,
and
yeah,
D says,
approval.
yeah, there you go. Well, I'm not sure. I think they're pretty good. Do we approve it or do we review it? I don't know. That's a tough one. Interest and principal on a euro dollar bond issued in Germany are paid in,
This is in US dollars.
well, I guess no news is good news. I had somebody 11, but they're not showing. So good news for us. What'd you say? Did you answer yet? I'm sorry.
I said US dollars.
Yeah, and that means
Yeah.
no currency risk.
Uh,
Payments received by the owner of a 403b plan are
100% taxable.
right on at
Yeah.
ordinary income tax rates. A customer purchases an ABC $3 convertible preferred stock at 60. Par value is 50. Conversion price is 5. If the common stock is trading a half point below parity, the price of the ABC common stock is. So kind of
Let
a
me,
messy
yeah, let
parity
me write this down.
counting. Yeah, I'm with you.
Um, ABC $3 convertible. So let me see here. Uh, For this one, I'm getting, wait, let me just make sure. Uh, C.
C, you are correct. You are so good at math. Have you always been good at math, or is it just Series 7?
I think just Series 7.
I'm jealous. I'm jealous. Which of the following securities makes monthly distributions to its investors? This is very much a test question.
This is gonna be C.
Right on. Ginnie Mae's pay interest and principal monthly, very testable. If a customer attempts to place an order for munis that the registered rep deems completely unsuitable, the registered rep
Uh, uh, D.
That's right on. We unsolicited. Oh my God. An agent recommended investments in the XYZ fund. 10 years. She's referred by one of her customers prospect who inherited 500 as the beneficiary of a life insurance. The prospect tells you she's never invested in the market and is risk adverse. Wants safety of principal. The minute I see safety of principal, I go, okay, government securities. With liquidity second, the agent recommends the following investments. This recommendation is
Let me see. An agent recommended investments. Ooh, this is a, I feel like I'm stuck between, uh,
all right. What's the news, Ron? I knew you would. You're just like my person I'm working with right now, Andy. We're doing a shared screen final. And like you, she was dedicated, she's disciplined, she's organized. I think she too is going to make your mark. I'm so happy for you. Now, are you have to do the 66? Well, you put in the work, my friend. I mean, that's what I always tell people. I can't do the work for you folks. I can help you, but I can't do the work. So I'm so happy. You're going to take your 66 or 63, or are you done? Woo, all right. How exciting. All right. Well, I'm glad that you made it. I knew you and I were going to be committing Harry Carey if you didn't with all the work you put in. So, all right. Well, hey, I got to get back to work with Andy here. So I only picked up the phone with her listening because I knew it was a Beth. If I knew you were at risk, I would have muted my mic before I answered. All right. You bet. Yeah, you love it. I love it. I'll miss you. Bye. Bye bye. Woo, man, the testing gods are smiling on us this morning. All kinds
That's
of
good. That's great for him. I hope to
yeah.
have the same
Yeah, and he's an
results.
older guy. Don't Andy is older men and women sometimes. We're not as agile mentally as we used to be. So, but he really put in a lot of work. And then he has
That's
a,
good.
a couple challenges too with, just I'm not a medical professional. So
Uh-huh.
sometimes when Fenner is very accommodating with people with challenges and give you extra time. And I was tempted to say, don't take the extra time. It's just more time to. Okay. What's your answer to this one?
Um, let me see. I think let me just reread this carefully one more time.
Yeah. So she says life insurance policy. She tells her that she's risk adverse, right? And safety a principle. There is nothing in this that says she's interested in growth. I
I
is
feel like I could be wrong, but I feel like I'm just gonna stick with D. That was my original
Yeah,
answer.
that's
Okay.
the right answer. It's unsuitable because of
Because
this growth.
sometimes I see one thing that I'm like maybe,
Oh,
but
remember
then
we said when she says risk adverse, we say
Mhm.
stock market's out,
Okay.
right? And then she's never invested in the market before, so that's another thing that makes it go poof.
Hmm.
And
Okay.
then safety of principle means government, that's
Hmm.
in, uh, liquidity, money markets in. So if this would said 350 in government bond fund and 150 in the thing, that would be okay. Liquidates the position. I like this answer set. The liquidation is.
Owning an option. This is a D. D?
Yeah, you're correct.
Yeah.
Yeah, I would have been surprised had you not got that. And the reason, Andy, I would have been surprised is because you got the one with the put where you made your T and you closed it out at intrinsic value. So
Uh-huh.
I was expecting you would have got this correct because you own it, you're long, you did an opening purchase, now you're doing a closing sale. Excellent. From first to last, who are the claimants in the event of corporate bankruptcy? From first, who's first in line, to who is last in line?
So this one's gonna be first, first to last. Okay, so A.
Yeah, excellent. That's a good get,
Uh-huh.
my friend. Good get. An aggressive investor buys an ABC stock with a beta of 1.7. The S&P went up 10 and ABC's return was 12. What is the alpha for ABC?
As a bit of 0.7. Uh, hmm. I feel like I I know alpha has to do with the return, so I'm like,
That's right. So beta,
uh-huh.
remember we were expecting here,
Hmm.
we were expecting a 17% return, right? Based on beta, because 1.7 times the 10.
Right, and ABC. So, is this D?
It is D.
Yeah.
Alpha can be both negative or positive. In this
Positive.
case,
Okay.
it's negative. You got it correct. Last one. Woo! A 42-year-old customer has been depositing money in a variable annuity for 5 years and plans to stop investing but has no intention of withdrawing any funds for at least 20 years. He is holding.
Oh my gosh, I always get confused between the accumulation and annuity.
Well, that's
Uh,
exactly what this question is about. That's
mhm,
exactly what this question is about. So when you annuitize, we're going to turn your accumulation units into annuity units.
mhm.
But you have not annuitized,
So it
right?
just remains it just remains accumulation units.
Yeah, until you annuitize, right? And then yeah, that's based on that separate account. When you annuitize, then you're going to be getting payments based on what's called the assumed interest rate.
Okay.
All right, here we go. That will get it done. So I'm going to throw out. So here you got 83, but I'm going to say we missed actually seven more than that, and that still puts you in the ballpark because I helped you on. I counted 8 times where I helped you,
Uh-huh.
and so -8 is still great. I think we talked about most of these along the way. Yeah, was that a bad? That was a bad miss. I think. Did I call that a bad miss?
I think it was like twice.
Okay, so yeah, that was a bad miss. This one. Yeah, that wasn't a bad miss. Because the munis, that was a tough one. Now we know we talked about that. Don't think you're going to see it.
Mhm.
By the way, we'll send you a copy of this PDF of this practice test so you have it, and you can
Okay, perfect.
review what you got right and what you got wrong. Let's see. Combination is a straddle with different strike prices. We talked about that. I thought your option performance was excellent. I don't see any red flags like things that make me think you're not going to pass. This was a very bad miss because you should know the Ross have no RMDs, no required minimum distributions. I think you only missed, two in a row a couple times. That's not bad. You said they're not allowed. Well, they are. That's the whole point of
Mhm.
insurance is because they can use the word guarantee, right? You said, yeah, that grammar was atrocious. It's TTA who receives the TIF. So I wouldn't worry about that. I told you the thing to know is 1 day to validate, 3 days to transfer.
Okay. One data
Municipal series accept. This was a tough one. The call provision, remember, isn't on that confirmation, right? That need not be disclosed. And that's the test point. I don't particularly care for this particular question. Ginnie Mae, it's T-bill. Now we know, right? Because it's
Yeah.
2.2.
Uh-huh.
There's no such thing as a duration spread. No such thing. It's either, credit, debit, calendar, vertical price. This was a credit spread because of the difference. Spread always means difference. And this is the difference between what high quality debt pays treasuries and
Hmm.
low credit quality corporates trade. Who cares? Yeah, who cares on that one? I told you the test question on Ginnie Mae's, and this isn't one of them. Unless it instructed otherwise, yeah, who cares? You want to see anything on the direct registration program system? Look at that. Wow, look at all that green. Man, you
I'd
went on
love
a
to see that.
roll. Look at the roll, man. Woo, that's a good roll right there.
I love when I see that on practice
Man,
exams.
man. Yeah, you were on the backside of this question. It's the opposite.
Okay, so the highest cost, least
Yeah,
gain.
with the lowest gain. Who cares? Now you know. The 25% is not testable. What's testable is to understand you have more risk when we don't identify either the properties, if it's a partnership, or the security, the operating company to be purchased. Yeah, you were close. That was 4.1, and D was 4%, spot on. Right, so that's why you missed that
Hmm.
one. Oh, there's another nice roll. Pass, yeah, that one you should know it's cost basis.
Okay.
Into a new one called roll up, and you had the 2%. You just didn't know what it was called. Who cares? This was a bad miss because we should recognize bonds at a premium or quoted on a yield to call basis,
Okay.
right? And then this one was the same kind of a question. You only missed that because we know which one it is.
Hmm.
It's not that C is wrong. It's just wrong in this scenario because we actually were told that the bond was at a discount. So not a bad miss. Yeah, remember the differences. We have both traditional mutual funds and ETFs that track
Hmm.
indexes.
Right.
The distinction is one is based on NAV at redemption, the other one
Hmm.
trades. The other testable distinction, by the way, is an ETF can be purchased on margin,
Right. Yeah.
whereas you open and you're not. Principal review. Yeah, I thought this one was kind of iffy. So we're not approving your correspondence, we're reviewing it. I wouldn't worry about that one at all. They're not going to make the distinction on your test between review and approval. I think I even said the word approval.
Hmm.
Right. All right, that's cool. Okay, let me go here. Boom. And here is we, us. And I'm going to print and print options. Boom. And I'm going to print this as a PDF.
Is that mine? The
I'm
place.
going to email this to you. So,
Oh, okay, because I only saw 8 questions, so I wasn't sure if that
no,
was
it should be the whole thing, I think, right? We'll check it just to be sure. Andy's.
because it says question 2 out of 8, so I wanted to
Oh,
make
no,
sure.
well, maybe I picked the wrong one. Let's see. Let's go back. Let's see if I can go. I'm not as technically literate as I should be. 2 of 8. Oh, I think you're right. We grabbed the wrong one. Okay, how do I cancel this thing? Cancel, cancel. Yeah, we looks like we grabbed the wrong one. QBank. Quiz. No, we don't want the quiz. We want the simulated exam. What's today?
The 15th.
Oh, so somebody else is doing our thing.
Ironically enough, my strongest subject in
Now, let's
college
make
was
sure this is
math, so maybe,
respected analyst. Is this us? I think this is us, right?
yeah.
Okay.
So maybe I am much better at math than I thought I was.
No, I was very impressed. You beat me to the math almost every time. Save. Okay, try it again. Andy's Series 7 intellectual inventory. Boom. Up. And the recording, it's a commercial Zoom account, so your recording of the session should be available at the end of the day. I'll get it to you either tonight or tomorrow. Uh,
Okay, no problem.
and then boom, save.
I think I deserve a small nap after this.
What's that?
Uh,